Okay, welcome everyone. Tonight is the Charlotte Investors Business Daily Meetup Group. My name is Roy Maddox. I'll be hosting the meeting tonight. One second. There we go. Make sure your buttons are mute, please, everyone. I will be hosting the meeting tonight with my son and partner, Wesley Maddox. Um, we've been hosting these meetings for the last 7 years. So I think we're getting close to 100 meetups, and we're thrilled about that. Tonight, we're so excited to share with you our view of the market, of the current market overview. And also, we hope to inspire you, motivate you, prepare you for the upcoming days. We want to help you navigate through the volatility that the market is currently experiencing. We want to also let you know, and we want to make sure that you don't give up. The market is very, very volatile, very, very choppy here, but it will be resolved, and we think it will be resolved to the upside, maybe with a few more scares. But when this market breaks into new high territory, watch out because the market will be in gear. We are so excited about what's happening in the market because this is the most friendly business administration that our country has ever experienced. Now, what does that mean? It means that we're going to enjoy much innovation, much growth, technological expertise from AI to autonomous driving to robots and many other new discoveries as capitalism endures. Tonight, the meeting will be comprised of two different portions. Wes will bring you through just sort of an overview of what we're seeing in the market currently, just a broad overview, and that will last about an hour. And then I'll take the reins and I'll talk about individual stocks. We believe that individual stocks and owning them will lead to prosperity over time that you can't even imagine. I've been doing this 37 years after meeting Bill O'Neill, who was the founder of Investors Business Daily back in 1988, along with his protege, David Ryan. That meeting that I attended, that seminar that I attended in Houston, really changed my life, and it set me off on a journey of just enjoying what the stock market can provide, and provided the passion necessary that fueled my progress and success over almost 4 decades. So we hope to share some of that inspiration with you tonight in our meetup. This meetup group is comprised of about 3,000 members all over the country. And tonight we'll have people that are tuning in from all over the nation, and and we'll probably have some international people that attend as well. So without any further ado, let me turn it over to Wes. He'll bring you through the slide deck. And again, thank you for coming. We think you'll enjoy the presentation tonight. Wes, take it away.
All right, thank you. So yeah, the title I chose for this month was Fighting Off the Headlines, and I'll go through a couple of charts and show, those headlines that you guys are all familiar with, and how, the market I think has shown a little bit of resilience, despite a number of reasons to go down and stay down. So that's kind of the way I'm seeing it. The last month, the prior month we were talking inflation and oversold and high bearish sentiment. And this month we're kind of just looking at consolidation and fighting off bad news until the market resolves either way. And we'll talk about reasons why we continue to be bullish. And so that's the way we're always going to lean anyways. We're always going to lean 70-30 bullish almost always, but we'll go through some reasons why. And so, Roy mentioned this is our Charlotte Investors Business Daily Meetup group. It says maybe close to 3,000 members now, and it's a community that's grown over the years that we've been kind of co-hosting this. And it's all about the work that was grounded in William O'Neill's How to Make Money in Stocks, and it's just a real practical approach to how to make a meaningful difference in your financial lives through investing in individual stocks and concentrating in leaders and how you can change your life. So, we get together, we continue to get together with this group once a month to share ideas, share our thoughts, and get feedback and hopefully get some ideas from you guys because we have lots of very experienced investors on the call with us every month too. So please chime in when you have something. And just here's a disclaimer, we're here to just discuss. Nothing's a recommendation that we're giving here. So talk to an advisor if you if you want before making any decisions. So just a little background, just in case you're new. This is the CAN SLIM acronym. This is a big part of that How to Make Money in Stocks. It's just a convenient acronym to talk about the leading characteristics of leading stocks. And so we'll talk about current quarterly earnings of at least 25%. We may even say translate that to revenue growth nowadays. We've talked about that in the past, how even revenue growth is super important because a lot of these stocks are pre-profitable that are going public. Annual earnings growth, so that compounding of 25% is pretty important. We're looking for new products, new services, new conditions in the industry, stocks making new highs, and that's just the phrase we always use is we're looking for companies that are changing the way we live, work, and play. And so there's a number of those things that are out there always, and there's so many entrepreneurs in America, and we're fortunate to have that opportunity. So we'll go through some of those, I'm sure. Supply and demand. So we're looking for volume cues. A lot of times, the big institutions that can't hide, they're piling into things and they're willing to pay premiums for these new innovative companies because they know they have to get in now because they're looking 10 years ahead. So we look for that big accumulation days. We look for the leaders versus laggards. So we talk about the number one stock in the industry. We're not talking, we don't want number two, number three. That's, for a catch-up play, that's, a bad idea. We look at what's the big money buying? So that's institutional sponsorship. A lot of times, really, it's not retail that's moving stocks. It's certainly not retail that's moving stocks. It is the $100 billion sovereign wealth fund that is making a $1 billion position in that company, or the hedge fund or whoever. And then we'll talk market direction. That's really essential for everything. If you get the market direction right, you're going to get a lot of other things right. So, 3 out of 4 stocks are going to follow the market. So that is certainly helpful to have that uptrend at our backs. And so we just kind of give a high overview of our process, what the most important things are. I'd say, technical analysis might be I'd say it's our number one because it shows you the relative strength. It shows you stocks that are moving before the numbers. So that's why, fundamental analysis can't always capture that first, right? You're going to see it first in price. So technicals, we care about fundamentals. So a lot of times you can do the research on companies that you're keen on and you understand and you see that they're making a technological breakthrough of some sort and have a great new product that maybe hasn't become widely known yet. That's where the kind of fundamental analysis comes in. And then macroeconomics. So, we kind of have a high level framework where we just want to understand growth and inflation, very high level, but two important things to us that just we want to have some kind of context of where we might be in that cycle. So, a little more detail on technical analysis. Again, we'll have these slides sent out so you can go through. Price, though, being the most important, we'll talk about trend and different price indicators, and then breadth. So, is there a lot of participation in this bull market? Sentiment, we like that at turning points. So when you see extremes in sentiment, that's usually a helpful indicator, but that's it. So that's the main time when we really want to key off of sentiment. And then ratio analysis is really talking about relative strength, and we find that to be an important thing as well. And not to go too much into this again, it's just fundamental analysis. Again, that second pillar, CAN SLIM. for us, it reminds us of these characteristics. This is what we're looking for. If you know, from a high level, this is what we're looking for leaders. So it's just a helpful reminder. So we'll go through a few things, just what we're looking at, some, a few things that were shared around and maybe we wanted to get in more depth. But this is some cycle work. Mark Minervini, I think he shared this, and this is but really from Ned Davis research. And we've been looking at this 4-year presidential cycle for a while, and we saw that the second half of last year we thought would be good based on the cycle work. It turned out to be. And now here we are in this period, which we've seen. I mean, it really has been spot on. The cycle work for a few years now, a couple of years at least. So we're consolidating, and it looks like, at the end of the first quarter, maybe after Donald Trump loses some steam and stops, I don't know if he will, but maybe there's more clarity on what he can do and what he will do and maybe there's more clarity on his actual policy initiatives, or maybe he has momentum building and a tax cut or something. But anyways, we'll see how that timing works out. But right now we're here. We've had these pullbacks. We're consolidating, and we might have another month and a half of that before the cycle work says directionally we can improve. This is another look at the cycle. This is an equally weighted 1-year cycle, 4-year presidential cycle, and 10-year decennial cycle. So it's this composite cycle, which you can look at, and so it takes into account all three of those cycles that we're in. And again, same thing. We're right here, mid-February. It's consolidation time. This is saying the first quarter is generally consolidation. We've drifted up a little, sure. The S&P is up 3%. Okay. But it's been choppy, right? It could be flat in 2 weeks, who knows? But that's saying that we've got some work to do. We had a great year-end run at the end of the quarter. It makes sense to us that we'd have 3 months to pause after 3 months of significant progress, really. So we kind of we're seeing that. It's evident we're in consolidation mode. And what started the consolidation? Well, I guess I didn't even label this part, but this is because it's a little bit old news. But this big force was the Fed. And that's the market looking for an excuse to sell off. And that was maybe a slightly more hawkish Fed. Huge, huge down day, down 3% or something right here. And since then, we've had a few other headlines. And we had this January inflation scare. That was the day before our meeting, or the day of our meeting right here. We talked a lot about that. So there was a lot of pressure on the market there. And then we had this Black Swan deep seek event over the weekend. Tremendous, pressure on leading stocks and a huge down day in those things. And something that really had a strong possibility of shifting the narrative. It's a legitimate concern. The first simple thought through it, right? Okay, if it requires less infrastructure, that is bad for AI investment, right? We're over investing. But then, there's all the debate that, okay, if it's just cheaper to run these models, then we're just going to run them more. So it just completely offsets it. We'll just run them 20 times as much and we'll find 20 times as many applications. And that's certainly possible. So we're sitting here trying to still debate, and we'll look at the stocks in a second about what that means, what it ultimately means. But anyways, you get hit with this headline. Massive black swan, Nvidia, the largest loss in market cap in history, right, in a single day for any stock. So, that's huge, huge news. Surprisingly, we rallied the next day, got half of it back almost, and then even got it all back and, ultimately sold it off on that other Friday. And then Monday, we have more tariff news. We have Canada, Mexico, 25% tariffs. There's a lot of, worries there. China tariff headlines over the weekend again. We're going to put tariffs on aluminum and steel. Okay, and each blow, we seem to be recovering quicker and quicker, right? So that's interesting to us, and we're in this consolidation mode. And if that's not going to take us down, I don't know what is. So that's what we're kind of trying to figure out. And we're always having these meetings, right? The day before CPI. I don't mind it because it seems like it's been such a key day every time. And so here we are again. We fought off the headlines. We're poised here, and maybe we get this friendly number that kicks us into gear to the upside um, tomorrow. And so, again, this is the DeepSeek news, right? So just highlighting what happened in that day. And man, this was a lot of dumping, and it's still we're still trying to figure out what it means, who's going to be the real winners and losers, and where was it overdone? You can see some of these the sol or not solar, the nuclear names bouncing back some, right? You see VRTs bounce back just to, it's filled in the gap. It's, we're not totally getting rid of that risk. Coherence faded a lot. A-Lab has looks like it's breaking. So it's still up for debate, certainly what it really means. It's only been a couple of weeks from that news and we're still sifting through it, but um, it's tough. It's unclear, right? It is unclear. And certainly the chip cycle could be peaking right here. It could be peaking in 2024 or 2025. And the stocks are going to discount that. So, the no sense in staying in love, falling in love with any of these stocks that were leaders, right? CEG, I think nuclear was the number one performing sector for the first 3 weeks of the year, right? So many of us, I'm sure, were invested in these things because that's what we do. We invest in the leaders, and CEG went from an all-time high to down 30%, right, the next day. So to us, there's no real setup here. It's you could have played these for a reflex bounce, but I don't know. We'll just see how history looks back on that day, that deep seek moment. Will probably it'll be remembered for a long time. But if you are interested, by the way, in learning a little bit more about it, I think I found that one resource was this Lex Friedman podcast that I'd suggest. It's 5 hours long, but it's good. It's thorough. There's a couple of experts that he talks to that seem to be incredibly well informed on this. On a lot of just a lot of details of what this is going, what this means and what the hyperscalers are doing and what OpenAI is doing and all this stuff. So I would suggest that if you have time to listen to some of that. Okay. And last meeting we were talking about we were looking for this. We were looking for a peak in the 10-year. So far, I'm just highlighting. Okay, we think we got that peak. We've had a steady decline, and we're getting this recent reflex bounce in rates the last few days. And then, sorry, the name of the podcast, it was Lex Friedman. He's real popular. I'm not sure if you've seen him before, but he's got one about again, deep seek. I'm not sure what it's titled, but I'm sure it has deep seek in the name. Thank you, Sanjay. Yeah. So again, we'll talk CPI, right? This is what's driving rates, and what's ultimately I think driving the Fed's decision, and then just driving the market still. There's a lot of this CPI narrative, and I'm always trying to give us a sober look at what CPI is really doing and why we're not concerned at all going forward. And any kind of extreme fears right now of CPI rearing its head again, I think are wrong. Uh, we have the forecast here of 2.9%. That's the headline number we're looking for next year or tomorrow for the January number. And then a pretty steep drop off in February based on the Fed nowcast. So, that's great. 2.6, that would be, we're rechecking the lows of what we saw a few months ago. This PCE is also going to be down quite a bit, 2.3, 2.2% or something like that over January and February. So, again, when you're getting that close to your target, I mean, we don't need to be worried. And I'll continue to say that the reason why we're not worried and why it's just going to continue to have this slow downward pressure, although month to month, sure, there can be shifts. You just have this core number that's continuing its decline. It took this pause for 6 months. and that was a little bit of a kind of a reflex bounce in some of the real-time shelter data. Okay, where shelter right here, you can see took this, it's a little blip, right? Over a few months, but it continues its downward trajectory. It's actually below trend on a real-time basis, but not based on this extremely lagged data point. So this will continue to come down, and it's a third of the entire CPI, I think. So again, that's why we're not worried about this coming back um, over these next several months. And one thing you got to look at too is what we're doing in government spending. As of right now, we've got this new administration, and they're not focused on stimulus really. They're focused on cutting costs. It's anti-stimulus, and so that's one of those things you got to wonder if what's going to outweigh the one thing or another. It's is it going to be the cut to spending is going to outweigh the lower rates because you'd think of lower spending, lower U.S. government spending. That means less treasury issuance. That means less supply, which means rates come down. And rates coming down is certainly good for private investment, but we're trying. I think you got to wiggle through what it all means. But anyways, as of now, we're focused on cutting spending. It appears, and hopefully that. I mean, obviously in the long run, cutting wasteful and fraudulent spending is a good thing. But at the same time, perversely, you wonder if you cut $100 billion in spending, it's just less liquidity to the market. But we will see. It's a good move long term, regardless. But um, all these things, nothing happens in a vacuum. So we're always aware of what could happen, what we could miss or be misunderstanding. But for now, okay, rates are kind of I think short-term rates are kind of a non-mover. I think in a perfect world, rates stay exactly where they are on the short end, the 1 and 2 year. I don't think we want to see them need to cut necessarily. We don't want dramatic moves lower because that signals something wrong with the economy. But I do want them to, I can envision, a world where these are drifting lower, but not meaningfully over, the course of a year. Mm. And okay, we'll look at more context. We talked about this last month too, where we saw these drawdowns. Okay, and to give us a sense of are we done with the drawdown? We very well could be, right? 7% drawdown, that's normal. It's just like what we had in April, and then the 15% drawdown in the Qs in August. So this is right in that area. We've already had it. We've had those consolidations, and the way we're bouncing back from these negative headlines, I think is encouraging. I'm pretty sure. I'm pretty sure it's encouraging that we're holding up like that. So that's what kind of gets me more. That's what makes me want to lead optimistic. This is clearly a good VCP type pattern where we've got these higher and we're just poised to move to new highs. We'll see. We hate getting whipsawed, right? We hate when this stocks break out and then they reverse on us and completely break your expectation. But that's what we're looking for, right? We need to be ready to act. We are invested in some of these leaders, but um, but we do want to be ready to if that happens, since we're trend followers, we're going to have to be fully invested, basically taking out that high because to us that's a buy signal. Breaking out from that consolidation. So we're ready for that. Yeah. And this is a look at the mutual fund index too, just because we shared this last month too. This is just looking at the drawdowns we've seen here. A lot of higher drawdowns in some of these leading mutual indexes, which we were surprised by most recently. They did a better job um, in the August pullback actually than in this pullback. And so, just I don't know, curious to action about how that happened and not getting much of a bounce as of yet. And okay, so I'll go through a few things more. I'm just going to go through actually all as we typically go through, a little bit more this time, and show you why. again, consolidation mode. I don't have a firm opinion. We're not, it's not like we're clearly oversold and clearly bearish or we're clearly overbought and, euphoric or anything right now. We're very much in this wait and see with the market environment. You have this MACD momentum indicator, which is kind of toying with you. It's buy signal, sell signal, buy signal, sell signal. Maybe a buy signal tomorrow if we go to if we take out those highs and take out that trend line in the indexes. So that's one thing we're looking at. It's in a very neutral position. When we look at moving averages, we consider us to be in a strong uptrend when all these moving averages are aligned. So the 10-day is above the 21-day, which is above the 50-day, which is above the 200-day. And so, we had that really strong trend from September, the September low. And now, we're in this choppy, okay, we got the crossovers in different directions, and now we're just converging, right? Everything's converging right here. And it looks very much like a poised springboard to, I mean, I hope to go up, but it's just consolidating. Here we are. We'll see what the market needs. If it needs to wash you out one more time, to scare you out one final time, we'll see, or we're ready to go. But just, be flexible either direction from this point. And here's a look at this is our long-term trend. We look at it versus the 30-week. Nothing really here. The long-term trend, clearly remains intact for us. So that looks good. This is the S&P and percentage of stocks above their 20-day moving averages. So a bit more of a short-term oscillator. We had a great resurgence in January to that 80% level. And now we've just, again, in consolidation mode, we've come back to about 50% of stocks above their 20-day. Similarly, look at their 50-day. We had a surge from 20% to 60. Now we're, again, very neutral, right at the middle. 50% of stocks are above their 50-day. And then here's the stocks above their 200-day down here. Had that improvement, but again, we have more room for improvement. We certainly do for this indicator. And here's the NASDAQ and their stocks above their 20-day moving average. We didn't get super overbought on this indicator. We're again neutral, fine. It oscillates quite a bit. There's nothing to say, I don't think, about that either. Here's the stocks above their 50-day at 41%. We reached a low that was pretty consistent with prior pullbacks at 30% of stocks above their 50-day here. And now we're, no meaningful improvement to say, hey, we're super overbought. And, this is one of those funny indicators that has been flat for now over a year. And so we've had this bull market with less than half of the stocks above their 50-day moving averages. So, I don't know what that means. I don't know how to even explain it. I guess it doesn't matter. I guess you could say it continues to be a little bit narrow, and there's some winners and losers, and we're certainly seeing that in earnings reports. So just keep your eye. One of the key things that we're doing, Roy and I will talk about what we're buying. It's the ones that are beating and raising on earnings, because there's a lot of these tech companies that survived 2022 that are changing from negative earnings to profitability. Spotify, as an example, being one of them, and it's kind of unbelievable the swing in earnings power that some of these are having now. They're committing to operational excellence and cutting costs. So we just keep an eye on those, most importantly, because who cares about the 57% of stocks that are below their 200-day? They're out. They're not on our list. Just keep your eye on the stocks, most importantly. Here's the NASDAQ, and it shows the net new high number. So, typically you're making money when a bunch of stocks are making new highs. And a bunch of stocks are making new highs usually when indexes are all-time highs. So, we're aware that we make the most money, and you guys do probably too, and just when we're at all-time highs. This was a good period, right? They're brief, they're brief periods, but this was a good, let's say, 8-week period, with the indexes at all-time highs. So we think Roy's going to go through a lot of stocks that we're looking at and own and on our buy list, and you guys share your top ideas too. And that's what's going to run the most when these indexes do go to all-time highs. Here's the New York Stock Exchange and net new high number. It shows a different industry group. Not the tech heavy Nasdaq. It shows a lot more industries here in this index, so that's interesting, right? You see a lot of different things working well, and there's a good chance that post CPI number, if we do get some kind of rally out of it, this might be where you need to focus some attention. So that's something to keep an eye on. You might see some financials work really well. You might see some industrials work really well. A lot of small caps might I would look to IWM perhaps if we do get that friendly number, because I think that the IWM is maybe the least um, the Russell is probably the least crowded of those indexes right now. And okay, so the McClellan oscillator we'll talk about. We it's neutral. This is what we look at for overbought, oversold. It's done a good job for us in the past to give us hints that we need to take certain defensive action at overbought or oversold. But right here, nothing to say about it. Here's the NASDAQ oscillator. So just looking at the NASDAQ stocks. That's something we were looking at. I know last meeting when it was hovering near that oversold level and that timing of the CPI and everything. So it's a different setup for sure ahead of the CPI, not as favorable, because you don't have that oversold condition, right? And here's the VIX. I mean, we're firmly in this bull market where it is helpful. You're not getting stopped out of everything every day with volatility below 25 in the VIX, so that's fine. This can go lower, it can go higher. Again, I really don't have an opinion. We're just, again, consolidation mode. Consolidation mode. Here's the NAAIM, and it shows the percentage of, or the net long exposure of active managers. I actually think I think that number is not right. This 100, I think it's closer to, I think it was 65 actually last week and then 85, but this is an edit I made from a prior slide. So this is should be 65 and then went to 85% net long. When it does get near 100, that's when we get worried. That's when we say, we've seen that historically. You can look at this chart, how it's done a pretty good job of, warning you that you need to maybe take some profits offensively. So we do like this indicator a lot, but at 85, it's not telling us a whole lot. I think in a bull market, we're seeing that maybe that 60% is as low as it goes. So to us, this is right in the middle, right? It's not 60. It was 65 a week ago. Um, Again, very neutral to us. One good data point out there I'll point out is this bearishness. This is the most bearish we've been based on the AAII bull bear survey. We were at 43% last week, so that's pretty impressive. And a good thing. We like that. Definitely, we like that if you want to take that as a contra indicator. So that's one encouraging piece there. But I'll show you. This is the net number. So the bulls minus the bears. We've been net bearish for the whole year actually so far, which is funny because you think, okay, oh, this business mogul is taking over the country, and he's going to be great for business, right? Great for stocks. He was, he only cared about the stock market his entire last term, right? It was his barometer of success. Um, and we've been net bearish the whole year since he's taken office. So that's just it's funny how that works. So while the NA that's neutral, the oscillator's neutral, maybe the bearish sentiment's a little bit positive for us, positive to say we could go higher from here. This put call remains complacent. Um, but and the only thing I prefer it to be higher. I'd much rather it be closer to one. But I'm also aware of what happened in our last bull market when this lived at this level. Like this was the normal. And so I'm wondering if this is what I need to be prepared for this indicator, if that's the new normal and it'll oscillate around that number. So maybe this is neutral as well. This might be the new neutral. Um, so that's what I'm prepared. That's what I'm prepared to do, and we will see if that holds up um, going forward. And here's the other equity put call ratio we look at. This is just looking at equities and so a subset of that put call ratio. But again, I don't think there's much to say here. Similarly, you could argue that this is as high as it was, or again, maybe more. It's in neutral, right? If you look at the last bull market, the last major bull market in 2020 and 2021, maybe we're right here again. So same idea, neutral, neutral, neutral. This high yield spread continues to show nothing going on under the surface in credit. So nothing there. We don't have, I don't think we have the rate issue. I think, the more rates come down, the less of an issue this will continue to be. Maybe there's something like AIG. I think I saw them talking about their net losses. Who knows if that insurance issues become a problem. Maybe that could be a black swan event that no one's prepared for or fully calculated into things. But who knows? Government probably bails them out anyways. So um, it doesn't matter. But I think the FAIR plan is what they call it over there in California. So that's something to just keep an eye on. But that's not telling us, or this indicator is not telling us that there's something that we're missing right now. But you never know. Okay, and here's just a few more slides, like 5 more slides. Just the all country index. So we're looking at this long-term breakout. We're close to all-time highs across the world, so that's nice. It would be great to have a synchronized bull market across the globe. We're likely getting into this global easing cycle for every major developed country. I think Germany's been in like recession the last couple of quarters, so it'd be nice to have that economy improve as well. But anyways, the rest of the world is doing just fine. Bitcoin continues to go nowhere. It seems to be in no man's land. Uh, and just it's not, yeah, it hasn't done anything. There's been positive headline after positive headline. Right. Oh, there's supposed to be a Bitcoin reserve, right? And there's supposed to be all this deregulation, and Coinbase is going to benefit tremendously from a friendlier administration. And there's this narrative out there you may have heard about the debanking that was going on for all these crypto advocates. So you can take that fear and enforcement out of the equation, and Bitcoin and crypto should be a beneficiary, and it probably is going forward. And Elon just proposed putting every treasury transaction on the blockchain, which certainly makes a lot of sense if you want a transparent government, right? That's the perfect application. A transparent payment system would be great for the government um, to be audited and tracked because we should know what they're doing. So, there's a lot of good to come, but for now, we've just, as seen in the evidence of trying to trade it, this move right here, this breakout, what we looked at, a little bit of a consolidation and perhaps breakout, was sold into, all-time highs we were sold into. All-time highs here, we were, right here, the day it hit 100,000, sold into. So you're getting all these all-time highs that are getting sold into. So it just, it's been tricky. So, um, anyways, that's all there is to that. I mean, we are advocates of it and bulls, I guess, long term of it, but we don't have a super big, highly, we don't have a super big position right now because it's been difficult. And couple here, yeah, oil. So we talked about oil, that just the way that flows into inflation. We just keep an eye on it. And that seemed to peak on that day. That was the day of our meeting too, I think. So that was great. All that timing, all that stuff synchronized together. It was, the dollar peaking, rates peaking, oil peaking, and then the indexes hitting that low, the stock indexes hitting their lows. So, that came in right on schedule. It continues to oscillate. And if this is just a nothing burger, that's great, right? Just oil can consolidate between 60 and $80 and not have a huge impact on anything. You would think still that we're going to increase our production and all that. We'll see. We have no idea what's up Donald Trump's his sleeve when it comes to oil. All he said is drill, baby, drill over and over again. We'll see if they do it. He can't make anyone drill, and I think that a lot of these oil players have had their scars from different cycles and are maybe being more prudent about growing their capacity. But overall, that should be this is what we want. We should have increased supply, putting downward pressure, keeping a lid on oil, and that would be just great for the economy, for inflation, for people's living standards. I'll show gold because I wasn't looking at it a whole lot the last uh, 6 weeks, and it's been a great asset. And we've talked about it. We talked about it right here. We noticed it going to all-time highs. We've never been a huge gold person. We're not gold bugs. A lot of people are gold bugs, and they're just like they're Bitcoin bugs. I feel like you can be one or the other, but I don't know if you can be both. But um, gold, God, it looks great. And it's someone brought it up to us today, I think, or yesterday. We were talking. It's puzzling when you see gold going up and the dollar going up, in the same day, because you usually kind of think inverse, but that is where we are right now. That there's that massive gold breakout, 180 to 260. That's quite a move. It's quite a move for gold in a year. 30% move is, yeah, very big for that asset. And, it continues to work. It doesn't look like anything. Oh, it doesn't look like anything's getting in its way. But yeah, that's been a great place to be if you've been in it. Excellent. We have not, I haven't been at all either personally. And here's just a look at the US dollar. Huge rally from the October low there and pausing. We talked about how you kind of ignore the dollar until the later stage, right? You can withstand that 5% raise in the dollar, but then when it gets to the second 5% increase in the dollar, people start to say, hey, 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 it starts to become a worry for people. But I don't have a strong opinion on the US dollar whatsoever, and who knows? There's so many moving parts, gyrating things. There's the tariffs, there's raising rates to strengthen the dollar, and then the stronger dollar brings pressure down on inflation. So there's all these circular relationships, but the dollar is, whatever. The dollar, I have no opinion about where this is going, where it's been. It appears to be pausing here, and I would think that if rates are going to come down on the long end, then this is perhaps done going up for some time. And I guess if I were thinking now, I should have looked at what it did in the last Trump presidency because the tariff playbook's been seen before, and we dealt with the headlines last year or last term, right? We did deal with that. Um, we dealt with him before, right? It's the devil we already knew. Um, you have to navigate his headlines, his tweets. We remember this. Tariffs, they were his number one foreign policy tool last time. And, despite all of that, despite all of that, the market was very strong, right? 2017 was a very strong, low volatility year. I think historically low as far as maximum drawdowns went in the S&P 500. 2018 was another strong year until the Fed tightening cycle, which they pivoted from quickly. And then, we're just going to have to navigate through everything because you never know what might happen. And then his final year of his term, of course, COVID. So, regardless, just navigate through all this. The tariffs won't be the end of the world. Everyone's going to see the headline and say 25%, and Ford's going to make, pound the table talking about how bad it is for their business, but then they're going to make mitigating um, changes, right? They're just going to figure out that everyone's going to figure it out. And it's not going to be as impactful ultimately as everyone says it is initially. And we'll see if he can, if he can stop jarring the markets. But anyways, here we are, consolidation mode. I think we will see. Hope we've got a good list for you though. Roy's going to go through a good list, I'm sure, of stuff, and it's all stocks making new highs. So that's what's great is with the index is poised to be at new highs. We've already got a lot of stocks that are making new highs, reporting great numbers, having 10 300s, having massive changes. So there's clearly people might be missing the fact that we might have tremendous earnings growth going forward this year. That might be the key thing that markets aren't paying attention to right now because they're being distracted. But there's definitely potential for a lot of these stocks to have great earnings growth that we're going to be monitoring. So that is all I've got, and I'll just turn it over to Roy.
Thank you, Wes. Let's move on and let's get into the weeds now. And great presentation there, an overview, Wes. Wanted to take a look at this for the members so that you really get a clear sense of seeing this. Do you have the QQQ on your screen, guys? Do you see that right now currently?
Yes, we do.
Okay, so this is a little bit different of a perspective from the look on stockcharts.com. Notice here, see where you got this down trend line, and notice how tight it's getting here and the on this consolidation mode here. So after market, the Qs are up slightly, up 85 cents. And really tomorrow, I think is going to be an important day with that CPI number. So this is what we've got to contend with right now. We've got to contend with the CPI number that's going to come in. And if there is a slight improvement, and the market's not expecting a slight improvement, but if we would get say a 0.1% friendly number, you're going to see the market rally, and it's going to break probably out of this break above this down trend line. See how tight it's getting as we have this volatility contraction pattern. And you can see the downtrend line followed by the uptrend line in this very symmetric triangle pattern right here, which can go either way. So the risk is that, as we see it, is the CPI number might be elevated. And if it is elevated, that's going to frighten the market, and the market's going to sell off. Probably could be dramatically, but I think quickly the market will disengage from that and start to look at earnings. And you want to buy the stocks that have great earnings, where the companies beat and raise their guidance. And you want to primarily focus on the stocks that are making all-time highs in their price, or 52-week highs in their price performance. So I'm showing you here on this pattern. It looks quite symmetric. It doesn't look as it doesn't look abnormal at all. However, when you take a look at the intraday price, I'll show you the intraday price, what that looks like. This is what you've had to contend with this year. So this is the last 2 months using the 60-minute bar, and you can see that it has been amazingly choppy. So it's almost impossible to make money when you have a choppy environment. You need the market to be trending in an uptrend. In our experience, when the market is consolidating, it's very, very difficult. And you can see we've had these major reversals on the daily chart. And it is,
I want to ring.
yes. And so it's very, very difficult to make money in a market that's trending and choppy like this. And let me see here. Need to mute. Doug, could you please mute, please? And so it's going, we'll have a resolution fairly quickly. Now, you've got Trump's hyperbole that's off the charts, and you've got also the Hamas prisoner threat that's coming Saturday. There's a deadline there Saturday at noon. How that's going to be resolved is going to be important as well. So that's going to be some headline risk over the weekend. If Hamas folds and they return all the prisoners, that's going to set the stage probably for the beginning of the next major leg up. If there is, if there's more conflict on Saturday and Sunday, that's going to lead to some downside volatility. So we think it's important when you're in a choppy environment like this to keep your position size small. From Ken Slim and Bill's work, over the decades, he's always advocated really concentrated in, 2, 3, 4, 5 positions. And in fact, in his book, he recommends only having 5 to 6 positions with $1 million account. We find that to be very, very aggressive, and we're not quite that aggressive managing other clients' accounts. Managing our own money, it's somewhat different. It's more likely for us to put $1 million in one position than certainly putting $1 million in one position for a client. So we think that while the market's in a choppy fest like this, that you should keep your position size small. And we think probably 2.5%, 5% positions are probably what you need to begin your positions with until the market is either resolved up or down from here. So, just keep that in mind. Right now, again, in a choppy environment, no one really has made very much money. You can, as we saw, as Wesley demonstrated earlier, the IBD Mutual Fund Index, which is 20 of the top A+ performing mutual funds, growth mutual funds in the nation, they've had a 13% drawdown. So that's what, if the top mutual funds in the country have experienced a 13% drawdown, and you're maintaining, you're flat or slightly up, you've done an amazing job while you've gone through the chop fest. So what do you want to look for? You want to look for the companies that are making new highs in price. And we've been practicing this over the last few months in terms of showing you our holdings. So just for the sake of just cutting down some time, this is what we currently own in our core growth strategy. We hold in this strategy, we have held a number of these stocks into the earnings, and we've been rewarded in a few, such as Palantir and Spotify, and we've been penalized so far in things like Roblox, where we had a 20% profit going into the quarter and ended up selling it at break even. But these are what we think are the current leaders currently in the market. From a swing trading strategy, depending on your risk profile and your time horizon and the position sizing, that's all up to you. So what each of us does in our own account with our own money, that is up to you. So each of you are special individuals that should dictate based on your risk profile. It should dictate your position size. But we just think it's prudent right now to begin positions with smaller positions and then add to those positions if they work. So these are our these are our top holdings right now, and we will go through those so you can take a look and see what they have in common. And this is in alphabetical order. So we'll spend the next 15 to 20 minutes just showing you what these look like. And this should be of particular help for those that are new in terms of buying individual stocks. So let's just take a look at some of these and see what they look like. Okay, here's a firm, and we just bought this stock yesterday. We bought this stock yesterday right there as it took out the prior day's high. After an earnings report where earnings were up 143% and the stock was up that day 21% and volume was up 343%. And this is one of our favorite indicators that we look for. And we run screens every day to try to identify those stocks that are outperforming the market and those stocks that might continue to run. And a lot of these are signature setups where you can see clearly what the institutional footprint looks like. So this is a buy now, pay later company that had a great 143% earnings quarter, and you can see that the stock is the revenues have grown, and it was followed lately with this terrific quarter. So this is a stock that should trend higher, but yet we only have a 2.5% position because we're somewhat skeptical in terms of what the market would do. Now, if we have a breakthrough tomorrow in the market and the CPI number is friendly, this would be something that we indeed will press our position as it goes higher. If it goes lower, we will suspend any buying. We'll wait for the market to shake out. But this is a leading stock in the market that was just validated by its earnings report. The next stock is Dutch Brothers. Dutch Brothers is the coffee company, and you can see it had this 10-300 breakout right here, and that's what you want to look for. And in fact, while most people look at a stock that breaks out like this or it's moved up so much, and you say, well, this stock, and you might say to yourself, this is a stock that was up 20, if I can stop on the day, this is a stock that was up 20%, 28% on a tremendous rise in volume. And that was the institutional footprint that you want to look for. So that stock was trading at 50. Now the stock is 65. So it's up about 22% since the last earnings period. Now the risk in this is that earnings are due tomorrow, and we just don't know what the earnings is going to look like. So from a swing trading perspective, like I don't hold very many of these stocks into the quarter. I have found that you get a great trade typically from quarter to quarter, which lasts about 13 weeks. But from a long-term perspective, if you're a position trader that it's trying to hold a stock for 4 to 6 to 8 beat and raise quarters, you would hold this position, particularly if you have a profit like we do going into the quarter. It's no guarantee whatsoever. We have no idea if we're going to give back any, all, or none of our profit. We have no idea and no edge, and it's just a matter of how you want to handle things. But this is a stock that has turned the business around fundamentally. You can see earnings were up 48% last year. You got a nice projected gain of 22% this year, a $10 billion market cap that's had very nice quarterly results. So this is a leading stock in the market, and we'll see what transpires tomorrow after the quarter. Cava Restaurant, which is a Mediterranean style restaurant chain. We think this is potentially the next Chipotle out there. And we recently bought this stock, and we bought stock yesterday at the 10-day. It broke the 10-day and it's at the 21-day. But we actually bought this stock right here, breaking back above the 50-day moving average. So when this stock, you can see this stock was a leading stock. It was on everyone's must-own list. And then you reported the quarter. It gapped up big on the quarter and people sold it into the quarter. And so it was followed. That distribution phase led to the stock going lower, much lower. In fact, from 172 to 109. And it's when a stock trades like this, and this was not based on any fundamental news. They had a terrific quarter. Earnings were up 150% last quarter, and revenues were up 39%. But look at these numbers, guys. Remember, CanSlim is predicated on the notion that Bill found that stocks that were trading with earnings of at least 25% per quarter, with annual growth of 25% per quarter, and revenue growth of 25% per quarter, were consisted of those stocks that were typical of making their quote model books, and those are the ones that were described based on his research as true market leaders. So Cava Restaurants they're in the sweet spot in terms of expanding geographically with the domestic footprint across the nation. And so, they've got it's well run, excellent food, and the stocks, as measured by their financials, are exemplary. So this is something that you would want to look for. Now, when you get a pullback like this, tomorrow, if you get a key reversal in the market, in the stock would go down and have a reversal, intraday reversal, that would be a signal to, and by the way, these aren't investment recommendations. We're just telling you how we would handle it from a trader perspective. But if you get a key reversal in this stock tomorrow, that for us, that would formulate an entry type position. And then you can see I have an alert right here. And by the way, we're using market surge as we go through these stocks. There's where you would press the position. So if you didn't own the position, or if you own the position like us, and the market turns tomorrow, we'll probably press it. And if you want to, and if the market doesn't turn, or if it's flat, where you would add is right there, taking out that resistance. So you would, it may provide you with an excellent entry opportunity tomorrow if you watch the stock come down or come up, but just reverse the action of it today. The stock was down 7% today, and I think we have a 2.5 or 3% position in it, but we would press it right there when we have the alert hit. We would press it. You do have 14 days into the number, and you would want to have some type of profit established before the quarter. CrowdStrike, this is a name that's come back tremendously from the grave. You can see that it was a leading stock earlier last year or in the summer, and they had a problem with their software and with the Delta Airlines, and there was a patch that they messed up implementing throughout their enterprise network, and that shut down actually the air traffic control system with Delta all across the country, and they ended up being sued by Delta and other airlines for that obvious snafu. But it's come all the way back. So you can see where the stock broke out right here. Nice breakout over 389 out of this consolidation area. and it's just powered ahead. So this is showing you that this is a leading stock in the market, and it is being confirmed by the group. You've got CyberArk, CYBR, you've got Fortinet, FTNT, you've got Palo Alto that are all near or perched at all-time high territory. So this is what a leading stock looks like. It can certainly come in to the 10-day or the 21-day, but earnings are in 28 days. And this is one that you would want to, it's too extended in terms of adding to it here, but you can see where it pulled back to the 10-day about 2 weeks ago. You'd like to buy this, you would like to buy the stock at a pullback to the 10 or 21 day. Numbers are solid, and it's a leading stock in the market today. We've got high hopes for DoorDash, with Wes mentioned some of the financial characteristics. I want you to take a look at the metrics of this stock. And so you can see that DoorDash has had terrific performance. This is what a true market leader looks like. Now, they reported earnings. You can see the stock is up $11 after market. And with a good CPI number, this stock is going to probably be breaking into new high territory. We'll be adding to this position as it breaks into new high territory with a good number. You can see it's got a relative strength of 93. And what's so amazing about this stock, as Wesley's mentioned, look how 1, 2, 3, 4, 5, 6. This stock had lost money for 6 or 7 years, and then it's turned finally profitable. And that's a characteristic many times of new leading stocks that have high hopes, but they don't have any earnings. And then when they finally reduce costs and increase their growth rate, finally it kicks in. And that's a powerful elixir for a leading stock. Stocks that have excellent revenue growth, that are institutional favorites, that have tremendous liquidity, and that are going into new high territory. And notice here that from a CanSlim perspective, all this chop way down here, this is from where the stock gapped down. This is really an avoid. So you can get, if you're buying stocks that are making new lows in price, they can continue to make new lows for a long period of time. Just look at AMD. You want to buy stocks when they make a transition from a downtrend to an uptrend. Right here is where the stock made a transition to the uptrend, where it broke above the 50-day, and it was confirmed, corroborated by tremendous volume on the earnings report. Many times you see these stocks make transitions based on the earnings report. That's why the earnings report is so important to look at and study and at least be aware. You should never go into and never own a stock where you don't have an exit strategy, where, okay, this is where you have to get out. And you should also always be aware of an earnings, when the earnings is coming, because of the inherent volatility that's always present with these potential new leading stocks. So this is a great leading stock. The numbers are, and these numbers are, this is December, January. Yeah. So this is the quarterly report, 185%. And if you know, as I've mentioned before, we have found the great leaders in the market are those that have the great earnings results. And we like to focus on those stocks that not just have 20% earnings growth. We want those stocks that have powerful, explosive earnings growth. And another thing, it's always very, very useful and attractive when stocks have accelerating revenues and accelerating earnings for for 2 to 3 quarters. That's always important too. Sometimes you don't get it because there can be a slowdown in the economy. There can be other mitigating factors. But we found the stocks that have triple-digit revenues and triple-digit earnings results can sometimes lead to become great performing stocks. So keep that in mind. Goldman Sachs, we think financial stocks, it could be the XLF, it could be which contains a number of leading bank stocks such as Bank America, Wells Fargo, etc. We happen to own Goldman Sachs, and this is when the market was quite testy. And even when the market's testy, so you get an idea, you get a clue based on how the stock acts. Is it going to be a potential new leader? So this is the earnings report, and this came right in the middle of a sell-off in the market where the stock was under the 50-day.
How you doing?
I'm putting a message in because it allowed me to say something about the product that's used.
Right. Yeah.
What's this shit over here?
Lane, can you mute
Click,
please
just
right
click on
now?
the screen somewhere, not where you're gonna. Yeah, there you go. Might
What
click over
about
there.
this shit?
Click over there. I don't know. I'm used.
Okay, sorry about that, guys. Okay, back to Goldman Sachs. So this stock is setting up beautifully. They beat and raised guidance. This is a huge company that will benefit immensely when the IPO market is when it opens up. Remember at prior market tops. And by the way, I see some questions. We will get, when I finish this, we'll get to App, Hood, and all these other stocks as well. And we actually own Hood. So Goldman Sachs, premier financial institution in the world, if you will, and that had a sizzling earnings report. Earnings were up 118%. Sometimes you can't get, with these mega companies, you can't get 25% earnings revenue growth, but you do get earnings growth. And if this IPO market opens up, which we think it will, as innovation permeates throughout our administration and throughout our country, you're going to see a number of new companies that are launched that come public, from Stripe to companies that you haven't even heard of yet that are operating privately. I think Databrick is one. I think that have amazing performance results, but private. Those are the companies that can potentially be new leaders as this market uptrend continues. But Goldman Sachs, great quarter. Notice it again; it's at all-time high territory, and that's what you want to look for. We happen to own Robinhood, and in our core accounts, and by the way, in the swing trading accounts, we sold Hood, we sold Dash, we sold a number of these stocks going to the numbers, but we kept them for our core accounts. So Robinhood is legitimately one of the next new great potential brokerage firms. It has the younger generation wrapped up. Most young people, and got people that are in their 20s and 30s are using Robinhood as their primary account. They began because of COVID, and they amassed a great following back during the pandemic, and they've continued to stay with the firm as Robinhood has expanded their offerings. You can see the stock made new highs. Look at the earnings quarters here, guys. 116%, 132%, 600%, 289%, far exceeding the metrics that you're looking for. But again, you'll find out tomorrow if, if the stock drops to the 50-day, 21-day, 50-day, or if it races to new high territory. So you can see the stock is certainly extended, but extended stocks can go much higher and they can elevate their performance if the market conditions are right and the stock has a great earnings report followed by Wall Street raising their price targets and earnings projections. You can see it's got the highest relative strength that Market Smith gauges at 99. That means it's outperforming 99% of the companies that are trading on the marketplace. It's broken out powerfully, and if it's the beginning, again, if it turns into a true market leader, this is only 2 quarters out of 4 to 6 quarters that should last for 104 weeks. This should be, if it in fact is corroborated tomorrow, you're going to see this stock move much higher because it's got tremendous growth ahead as they launch more crypto offerings and add innovative incentives such as paying you incentives to add money to their IRA products and their taxable accounts. So that's coming tomorrow. So it's a leading stock here, and obviously we're up in the stock nicely. Bitcoin, we think, is our most convicted idea, and to me, this is the biggest potential space asset class that I've seen in my 37-year history. It's just a matter of time before the stock breaks into new high territory, but look how choppy it's been. It's been, you had this great breakout from here to there, 50% move, followed by consolidation, downtrend, as the market has tried to get through just the noise, whether or not Bitcoin was going to be added as a strategic reserve instrument. Is there going to be more innovation in the blockchain area? Is the present administration going to favor crypto or not? And everything is coming in on schedule except the price. So, so you could have one more shakeout, but if this stock breaks above the 50-day tomorrow, then we're going to probably add to it. This is our largest position. And so you want to see the stock break above the 50-day and get back and begin its move. It's been going sideways, you can see here, for 4 months, and that's worn just a tremendous amount of people out. But you want to see the stock move higher, and we wouldn't necessarily buy weakness, but if the stock reverses here tomorrow, look for that to finally be engaged in a new uptrend. And how I would handle it is if it breaks above the 50, that's going to initiate a number of algorithmic stops that will be hit. And then again, you would add it going into new high territory. See right here above 61, 62, because the real move will be in at that particular time. It's trading about 96, 97,000. And as you know, I'm sure everyone that follows crypto is expecting crypto to double in 2025. And we are in that camp as well. And we think that long term, over the next 4 to 5 years, that this could be the biggest performing asset that we've experienced, that I've experienced in my career, just because it's got institutional ownership, it's got institutional liquidity, and it's got the blessing of now the banks and brokerage firms, as well as Wall Street and the government. So this
Hey
is
Roy, just wondering, where would you sell the position entirely? What is like your stop loss?
the stop loss on something like this, man. It's toying with you right now. I mean, you could sell it. We're down in this position about 3% right now, and it's in no man's land. So it's in no man's land. And with that being said, at 50.69, that's where a lot of stops are going to be hit. If something happens, if this market gets crazy and quote risk comes off of the market because the CPI news is bad, or there's news over the weekend, and this is something, the risk on this is that it could gap down 10% in one day overnight. So that's one of those things that you have to weigh your position size. So I think we've got about a 6% position in it, I think. And Wes, what's our position size? Is that right? 5, 7?
I can. It's probably 6.5. Yeah, like really.
And we actually had 10 and de-risk down to half of that. I think like right
Yeah,
there.
it's 7 right now. And
Okay, so it's 7. So it's
Yeah.
one. It's one. We want to have 10% over 61, but we want to play. We want to. We could sell the whole position tomorrow if the market isn't cooperating, and then look to re-enter when the stock comes back above the 50-day. So where you could have been stopped out. The idea that it took out yesterday's low in this little area right there, that is somewhat troubling as well as puzzling as well. So this is just keep that in mind. That's why, and Wes and I both have had 20% of our net worth in here at various times. But we again we might have like a 5 to 7% position right here. So this is just one of those very, very indecisive setups where you could have sold it because it took out yesterday's low. You could have been out of it depending on your risk tolerance today, in fact. But we're trying to give it as much latitude as possible to hold on, because we do think that this is a potential shakeout.
Yeah, and, well, yeah. I was going to say I'm sort of in a camp where I want less people talking about it. Where it be people forget about it after it goes nowhere for 6 months, but it's so in the headlines right now, and it's they're selling into all-time highs, but. So I'm wondering if it's going to need more time to shake out or not. But, we never know. I guess whenever we have these ideas, like, that's a fundamental idea. We just have to manage it right and buy our time till it makes another leg higher. But yeah, I mean, it is in no man's land. Anyways,
And guys, look at this technique to answer your question as well. If it takes out this low, just the way you see how you had this little ledge of support, a few months ago, and you had what's known as, this is really sort of an undercut and rally, where it takes out a prior level of support, which is here, right there, when it hit 50.69, and that's where all the stops get hit. So it's important to know. And to know where institutions and mostly retail people, where they're going to have their stops in, and those give you nice little setups. And this is a perfect undercut and rally. See where it almost made new highs, but it's not ready to go up to break into new high territory. But notice here, if you take out this obvious support area, where you had, this was very, very supportive price, where you had this big candle and it closed at the high of the day, but it had this massive move down, but it closed at the high of the day. So people are going to have stops right there. And that's very close to where we are right here. So, so the people that are very, very risk averse, that have, I guess, quote, paper hands, they're going to be selling right there. While just quote, there's going to be some institutional support. And so this is going to be important to watch tomorrow to see if it undercuts where it undercuts and then turns, which would be a buy signal, a reversal off of a move down, or if it just takes out, or if it just firms up tomorrow and breaks above the 50-day moving average. So those are the ways that you can be prepared to handle that move tomorrow.
This IBIT or Bitcoin, both of them, they made a double top at 61. So
Yeah.
do you see if it breaks below 51 or 52, then it going to your line, which is at 42. It is a perfect calculation.
That's you could the eye of interpreting a chart. The eye is in the art is in the eye of the beholder, I guess. And you could look at it and say, hey, you got two double tops, or it's just a consolidation and it won't be resolved until you have a little bit more time. If it breaks hard from here, you could say, hey, that was a double top and I shouldn't be in it. Or if it reverses tomorrow, it's showing that it's up 44 cents, that this will be repudiated and shaken off, and it wasn't a double top. It was just a consolidation. So that remains to be seen. That's a great question. You won't know the answer to that until later.
How do you, if I ask one more question regarding this, how do you trade this parachute icon on the volume? Is it a consolidation or is it a top? Because it is a conflicting signal. In the consolidation, it's a buy, but at the top, it's a sell. The parachute icon, which is at the 118.
Right here.
Yeah.
That's not great. That's a warning signal. So you've got the highest volume here, and this was probably that Friday. This was the deep seek day where it was risk off. And again, we actually had the worst day that we've had in 5 years on that day, because that's the day that the AI, that's when NVIDIA broke. And, you had your biggest break in market cap of one stock in the history of our stock exchange, followed by by the data center stocks, the power stocks that got clobbered. And that was a pure risk off trade right there in the marketplace. So that's what contributed to the volume and the dumping. But from a positive perspective, with volume like that, the biggest volume since the ETF has come public, and that's it. That's the extent of the decline. You can spin that any way that you want to look at it. But you're definitely right that would normally be a massive warning signal. Yes.
Hey Roy, but that was also a great accumulation day. Just the way it recovered.
Yes, I agree. Yep, that was very supportive action, and that did. If you had a 1 day drop and it wasn't followed by immediate price decline, which is, you can certainly see that is an accumulation process there, where first of all, it looks like it was dumping, but the idea that's it. This stock just held at the 21 day from a new high to the 21 day, and that's what makes this encouraged about the holding, and that makes us think that, okay, this is just a consolidation where it's not ready. And look at the volume that's declined, see, over the last, even though the price has declined, it's been on lower volume. And, the average volume is the red line there. So to us, we're looking at that thinking it's constructive, not destructive. Okay.
Actually, this parachute icon is on the 23rd, and the DeepSeek new was on 27th.
Yeah, but it's it doesn't matter exactly what the date was. What matters is just the volume when that took place. Clearly, there was risk off on that day, where the market was scared, and for whatever reason, it could have been news from the government. It could have been, I don't know what the news was, but it stopped. The stock dropped on big volume, but it didn't really decline that much. So. It doesn't matter if it was the exact deep seek date or not, but that's how I interpret the stock right there.
Hey, Roy, how do you decide on IBIT versus Solana versus Ethereum? What do you know? We don't know. There's too many flavors.
Yeah, that's a great question. So we're not crypto experts. And so Solana, from our research, that's the next best thing. And then Ethereum hasn't had great action at all. And there's Ethereum. So you can see what Ethereum looks like. So it's definitely not a leader. But a year ago, it was all about Bitcoin and Ethereum. And you can see that this sloppy chart pattern indicates that with a 23 relative strength, shows that it's definitely not a leader. And for picking up Solana, we have to go to stockcharts.com or Coinbase or one of the other areas. But we have read very, very, very good things about Solana. We just have found that if you buy the leader, just the leader in the group, that's all you need to do. And we know that that Bitcoin is the leader in the group. Just like when the semiconductor stocks were leading, all you need to own was NVIDIA. You didn't need to own ONON. You didn't need to own Marvell. You didn't need to own SMTC. You didn't need to own AMD. You didn't need to own any of those other stocks. It was just all you needed to own was NVIDIA. So we're sticking with what we know, and we know that Bitcoin's the leader, and we know that that's what the government's looking for. Ethereum would not, because it's really a blockchain instrument, would not be utilized as a strategic asset reserve, but it certainly can be in our sovereign wealth fund as an investment. But that's the way that we've approached it. There are many, many other tokens that we're not familiar with that many of you guys probably follow, and so we're just not experts on that. We are experts on what we think is going to happen to Bitcoin, though. But you might have tenfold increases in some of the other tokens and some of the other things that are going to come out of blockchain. But that's just an area that we're not experts in. So that's how we're handling it. And there's certainly, so that means to what we're saying to you is we aren't the experts in that area. So there are going to be people that are experts in the area, and that it certainly might make sense for you to discover that on yourself and take positions. We did talk to a client today, and he's got like 4 or 5 different crypto accounts, and they're all doing various things. So, okay, let's just get through these, and then we'll turn it over to you. Intuitive Surgical, great leading stock that had a great earnings report. and this is what makes it so difficult, guys. The stock went up pre-announcing when they pre-announced the earnings, and then the stock was one of the first out of the gate. And this is the company that's known for the revolutionary Da Vinci surgical system. And then the stock, when they reported earnings, the stock dropped. But there has been some indecision in these medical defense stocks because of the government and because of primarily because of Kennedy, in his new role, that some of these might be affected. But this company is launching the latest and greatest new version of their surgical system that should contribute 25% growth. They're all over the world, and it should contribute 25% growth for the next 2 years. Very, very, very solid company. And you can see it's got a great price of $600. It's an institutional favorite, and it's setting up as well. So we're obviously owners of this stock. So you can see that if you own this stock right here, that taking out a new high is where you would add to the position. Say this stock over the next couple of days breaks out into over 616, that would be a trigger to add to your position. And it may just go sideways and just mark time here. But when you see it's very constructive, hasn't given back much, and when it does take out 616, that's where you should be pressing the position if you own it. Or you could initiate a position right there as well. You can see they hit those metrics of 20% revenue growth, 25% earnings growth. It's a big, big company, just like Goldman Sachs is, and it's certainly a leading stock. You can see that this is what the typical bull market action looks like. We don't know what's happening with Meta, but Meta is the leading Mag 7 stock currently. And look at this. I've never seen this. And I think this is 17 straight up days. This is the blue line. And upon looking at something like this, and this is, they're right in the middle of the AI large language models. And we don't know eventually what's going to happen. All we know is that this stock is acting terrific, much better than Google, much better than the other Mag 7 stocks. And that is institutional support. Look at the wall of blue of higher than normal volume. And we're just looking for an opportunity to add more here, because when you get a footprint like this with the volume, I just can't tell you how powerful and big this is, and how this is showing leadership. And so this is one of those stocks, if the market gets hit and it comes into the 10-day, or if it gets worse at the 21-day, that's where you should be adding to the position on weakness. So if the stock drops, say you get a little scared tomorrow and it goes to the 10-day, you could add a little bit. Then if it accelerates, the market sell-off accelerates, it's going to find support at the 21-day. You don't have volume like this, that's not going to be supported in the averages. So keep that in mind. This is great institutional stock. This stock is showing you that this stock could be $1,000 stock by the end of the year. So big money's going there. The numbers aren't that great, but on an annual basis, but institutions are buying it. So this is showing you that the institutions know more than the numbers are showing. Maybe Meta's going to buy TikTok. Maybe they do have the best LLM model. Maybe this, maybe that, whatever. Institutions are just loading up on it. And so the key to this, the key to your success, fellows, men and women, it's to follow the institutional money, not opinions. So you can, everyone's got an opinion. Everyone's got an opinion, but it's the market action that should lead you into these and help you find these leading stocks. And this is one of the leading stocks in the marketplace today.
Hey, Roy, can we take a look at the institution?
Yes, it's gonna be huge. So you've got 6,000 institutions that own it. You can see all the top A+ funds. So guys, look at this. These are some of the top mutual funds, A+ large cap growth funds in the nation that is in IBD's newspaper every single day, and they've had a 13% drawdown. And so imagine, I mean, these are great funds that have superior long-term performance over the last 3, 5, 10 years. And, just keep that in mind. If you've kept your feet, you just want to keep your feet above water, or your head above water, I guess. And get through this, because we are close to ending this consolidation. It's either going to end tomorrow or this weekend, or we're going to get one more scare tactic down, like Wes said. And but that by no means should that be a major sell signal or the beginning of a bear market, because the growth projections, the earnings projections are too good. I think we've had 77 of the S&P 500 stocks have reported, or maybe that's 77%. I'm not sure, but they've exceeded estimates by about 5 to 6%, according to FactSet, that releases those earnings projections. So we're having a terrific earnings quarter, and we're doing much better than expected. Just think, when the pressure comes off the market, these are among some of the stocks that you should be focused on. Okay, Netflix, we got 4 more, and then I'll hand it over. Trying to get through it, guys, just in rapid fashion. Netflix, there's the earnings break. See right there, broke to new highs on the earnings. It's consolidated the 10-day. Stock has great action, and it's going to be supported at the 10-day if you turn, or at worse, right there at the 21-day. And that 21-day is 4.3%. So you have 4.3% downside from here. I believe worst case, if this market would melt down, the 50 days about 9% away. So again, think about that. So if you take a 10% position in Netflix, are you willing to lose 1% of your capital, which is the maximum amount that we want to lose on any individual trade? We don't. We try to. We want to keep our losses minimal by only losing 1%. Of our capital on the trade. So in other words, if you had $1 million account, at worst, we want to lose no more than $10,000 on that trade. So just think about that from a position size standpoint. But listen, Netflix, they continue to innovate. They continue to add subscribers. This is among one of the most a sticky ecosystem that is on the planet, along with Spotify and Apple. So great report, broke out to new highs. This is, you had your volume characteristic. So this is certainly a leading stock with great metrics and estimates moving forward. Palantir, which this made our year last year, really, and we're up in at 40% this year. And there's the earnings. And, see, guys, you never know where, and we bought this stock coming into the 50-day. The market got really choppy there and it broke into the 50-day, consolidated, moved higher, and then it exploded. That's why you would want to hold some of your positions going, maybe, depending on your risk profile. This is why you might hold something going into the earnings quarter, and then it exploded and has tremendous movement ahead. And we're looking for this stock to be 150 by the next earnings period, the way that we showed you some of these other stocks. This could be the next Oracle, the next Salesforce, and they have a great stem winder with Alex Carp. He's just a terrific leader and CEO, and this stock has been hated by Wall Street, and Wall Street is way behind the curve here. So we think this stock goes to 150 by the next earnings report. Now, the risk is if this market gets hit, then the risk is it comes into the 10-day. See, back to the 10-day, which is 100. So, you have 13% downside just to the 10-day. So keep that in mind. From it can go to the 10-day on no news, just a wiggle. And so, if you have a 10 or 20% position, it's going to, you're going to feel some pain there. So, you have to address situations like this, carefully. But this is probably our most convicted idea of an individual equity. Looking forward this year to between now and the end of 2025, they're accelerating. Notice here, see, when I mentioned here about the acceleration, and MarketSmith Search gives a great view and representation so that you can see this. Notice the earnings acceleration: 8 cents, 9 cents, 10 cents to 14 cents. So you had big acceleration here, and they continue to hit their metrics on the revenue growth area. And I think they increased their on the earnings call only a week ago. They increased their estimate by they raised it by I think about 20%, if I'm not mistaken. So this is something, this should be on all of your list. If you don't have it, you should pay great attention to this. We think this is they had a transformational quarter, and this is what launched it right there. There's the breakout to new highs on the number, followed by the subsequent quarter right there. That's perfect action with what you want to see. It's got a 99 relative strength, and look at the liquidity. It's trading 86 million. So it's trading $8 billion a day in volume. So this is where the institutions are, right here. If you're in growth, you own this stock. Let's take a look. And notice Meta had 6,000, and this company has got only 1,800 funds in it. So you have plenty of upside to go as Wall Street embraces their technology.
And it has no Bill O'Neill favorite funds yet. So if one or two of those get here, that will make it skyrocket.
And that's a great point. I just can't believe I just can't believe that you don't have any O'Neill funds here. That's just puzzling. It's puzzling to me. But indeed, you're very, very right. They haven't. They have not. They haven't embraced the company yet, and so you have huge upside from an institutional perspective. Thank you for that comment.
One more thing, Roy. It's possible that those fund names may come out soon after the end of the quarter. They probably.
Okay. Yep. Yep. And where was let me see on the last. Let me back up. Rubric. This is a security company that broke out on the quarter, and it's a new IPO that broke out. And we have high hopes of this stock as well. Now, the stock was down 5%, down $4 today. So it's going to be interesting to see what happens. And some of the engagement over the subsequent days will be influenced by the market. But we have high hopes. This stock made a new high, 52-week high, and an all-time high in price only 2 days ago, 3 days ago. But it was met with some distribution and some selling as the stock made reversed, and primarily because of market weakness. They do have some O'Neill funds in it. Look at this. Wow. Look at this. They have more A+ rated funds than, and they're not making money either. Look at this. They're not making money. And yet they have more institutional ownership than Palantir. And so that's amazing. That's what got our attention on it. Some of your major winners come from stocks that are still negative, that still have negative earnings, but the market is looking ahead of that, and they're looking more for like the organic growth and the revenue growth and so forth. That seems to be what the market is focusing on now. And so this is a more speculative situation, but it's got terrific action, terrific action. And it is, we view this as a leading stock, and you can see these A+ funds view it as a leading stock too. So, whatever they're doing, it's they're setting some type of standard in terms of what they're providing that your typical security company is not providing, but the action is telling you all you need to know about the stock. And gosh, we still have a couple of these. Reddit reports tomorrow, and you had a great earnings report. This was among the most impressive earnings reports that we've seen. And Reddit is, you can see it's got the ingredients of market owners, of A+ ownership, made a 52-week high yesterday. Again, holding into a style like this, it can come in tomorrow to 200. It could come in to the 50-day. You just don't know. But this could be one of those magical quarters that's embraced totally by Wall Street. And it had a terrific quarter. And apparently they've got years and years and years of data that can be massaged by AI. And I think they've got 100 million users monthly, I believe. So this is a leading stock. And again, the market, it can pull back there to the 21-day, the 10-day. So, the earnings report and how it reacts is going to be paramount in terms of its continued move up. But you can see last quarter, 400%. They blew the estimates out of the water in terms of exceeding estimates, which is that's exactly what you want to see. SE, which we bought, which we own this stock. And if we weren't worried about, Wes and I were talking about this is really a perfect setup. As we see, look at this cup and this, 5-day handle, the breakout to new highs. and we thought about taking this position up to a 5% position. If we had an all clear in the market, we would have a 10% position here. We have only a 2.5% position, and we just bought it like in the last week, right? Right down in here, the last week. If we didn't have this event risk, we would have taken this to 5% today, but we didn't want to get in front of that CPI number. If the CPI number is not friendly, you're going to see this stock come in, and that might give you an opportunity to buy it. And again, it's got a 97 relative strength. You have 21 days to earnings. So if the market cooperates, then this is going to be first out of the gate. This to us would be a must own. But it's going to, the market environment tomorrow is going to dictate things. So keep your position size in mind. But this is definitely a leading stock. Look at earnings are going to be up 97% this year, and these truly have really nice revenue numbers, and they're starting to just exceed estimates with their earnings quarter. So it's in one of the top groups. It is in the 14th group out of 197 industries. So that's showing us that it's a leader. Shopify, we own this stock, and they had a terrific quarter. And we in our swing trading account, I sold it the day before, or I think the day before, or 2 days ago. But I bought it back today, and we have a 2.5 or a 3.5% position in it. And again, this would be one that got through the earnings with a great quarter. I mean, a super quarter, guys. If you go back and you read the report, it had a terrific report, and it had a great quarter where they actually hit their highest metrics in gross merchandise revenue and just in all their metrics. They hit the highest in their history in every category. And so this is just breaking out of a 12-week base. See, look, notice there, earnings come every 13 weeks. And now it's breaking out. So we have high hopes to think that this is going to be a leading stock. And the only thing that's over the next 13 weeks from now, the only thing that's going to hold it back is the market or something that we can't plan for. So great institutional stock with great liquidity. So you don't want to buy these stocks that trade 100,000 shares a day, or that trade $10 million. You want to be in the stocks that the institutions are buying. I can't emphasize that anymore. That these are the types of companies that you can put. You can have all your money in 4 or 5 companies, but obviously you've got risk associated with that. But it's got liquidity, it's got the earnings, it's got the endorsement of Wall Street. That's where you find leading stocks. This is a leading stock today. And the last two, Spotify, as you know, they're revolutionizing the music business. There's the earnings quarter. See, there's the move up. It's up 11%. Volume was up 500%. Went sideways, broke out. First out of the gate. See, this, guys, look, this looks sort of like Spotify looks right there. See where it broke out? That's where Spotify looks to me right now. And if you buy it here, your risk is to the 10-day, which isn't much. That's only it's only 3%, 4%. But
Hey Roy, I have a question. Why do you always say the risk is to the 20? Why is 20 for you so essential?
well, this I look at it from a context. So the risk to me, it's the 10-day here. It's the first line of support, but the next line of support, if the market gets really nasty, then it can go to the 21 day. So if you buy this stock, say if you just bought the stock, you have to be willing for it to go to the 21 day. That's 11%. So, and I'm just looking at the probabilities where, okay, there's going to be support, it could fill in the gap, and that's 11%. So, if you have a 10% position and it drops 11%, then you've exceeded the maximum loss that you should want to take. Now, some people will take 1.5 or 2%. They're so convicted, but Wes and I, we're like little, scared monkeys, and we don't want to lose more than 1% deliberately, deliberately, and that's the sort of the way we're wired, and everyone is wired, differently. But if you and we didn't buy it, I don't know where we bought it initially for our clients, but we were up in it nice. But we just you don't have any idea what's going to happen with the market, much less what's going to happen with these individual stocks if there's some distribution in the market. So I like to look at the 10-day and 21-day to see like where's the next line of support. So that's just the way that we look at it. And finally, the last stock is Twilio. I sold this yesterday in our swing trading account just because the earnings are in 2 days, and I don't know what's going to happen to the market. But this is where they pre-announced, and they had a great, great quarter. See, this is what you're looking for. There's one beat and raise quarter. This is the second beat and raise quarter. And, this stock, and this is a big comeback stock. It was a Kathy Wood stock that got pulverized that's come back. So these true market leaders, again, our history shows that they go 4 to 6 quarters, and this is the second quarter. So it's conceivable that this stock would peak, a year from now at $300, at some number, 300, 400, who knows? But I took it off the table because I didn't want to, well, first of all, because we got bamboozled in Roblox just a few days ago. And Roblox, which was, yes, it was extended, and we had a 20% profit in it, and we decided to hold it, and we gave it all back, on the earnings report, because we were fully expecting a beat. We were expecting a beat and raise quarter for it to continue to go higher, and that's what happened. So it happens, and there's no way, we don't know anything. Reg FD has changed, it changed the game so that you have these surprises. And, in retrospect, you can clearly see that, well, you should have de-risked, but that's why I de-risk from a swing trading perspective, all the stocks in our swing trading account, because we just got blasted in Roblox. And so I didn't want to take the chance of getting blasted in a Robinhood or an app or any of these other stocks. So that concludes. I've taken us through. Hopefully you learned something. This is the way that we looked at it from a guy that's got 37 years in experience, trying to get you guys in the leading stocks. And we're going to talk now and open the floor up to all you guys so we can look at any of the stocks you want to go through. And I'm already seeing some great questions, and I'll let you sort of know what we think. But remember, we're just mortal, just like you. We just have a little bit of experience. I always tell people that I'm the guy that has, for my team, our team, Wes and me, I've got experience, but Wes has got the smart. So sometimes experience over takes smarts. Often smarts overtakes experience. So, just keep that in mind.
Okay, so thank you so much, guys. This is great. So question about Twilio right here. So
Yeah.
they pre-announced,
Yeah.
are we still sort of worried about what might happen 2 days from now in earnings?
Yeah.
Are we still sort of could it still be expecting 20% up or down type of situation since it's already pre-announced, or that's different?
Yeah. Yeah. And what got me thinking, and look, this thing looks perfect. It looks like it should be bought. If I would be a buyer of this stock if they didn't have earnings in 2 days. And again, I don't want to get roadblocked. But they've already pre-announced. I don't know what can stop the stock other than maybe a secondary or something like that. And it's got really good action. So it's all about position sizing. So, and if you got into it on this base and then they pre-announce, you definitely have cushion, and And so that's the way you can look at it. I mean, it looks perfect, but ServiceNow looked perfect right here. Like it came back, and AI stock broke the downtrend line, and then they have a history, great institutional stock. They have a history of beating and raising their quarters, and it got crushed 11%, 12%, and in a day, and it looked like it was ready to go, and then that happened. So you just never know.
Usually the numbers are they different? What exactly is the pre-announcement versus the actual announcement, like earnings announcement? Are we expecting something else in this case, or?
It's not the number. Maybe it's, a lot of times it could be, there's more clarity again, when they pre-announce, it's just a blurb. You don't have the conference call. Remember, it's all about the conference call. See, Shopify yesterday was down, or this morning was down 10 on pre-market when they announced at 8 o'clock. And then the stock started moving up because the conference call was so good. And the CEO did a very deliberate and outstanding presentation about their future. And so, it came back, but the conference call moved the stock. And that often happens in the real world. And you never know. Like we bought DOCS 2 days ago. We bought this yesterday. What got our attention is it broke out, had that same signature that we're looking for, where they beat and raised the quarter, and then this was abnormal action. We only had a 2.5% position, but we sold it and lost 8% in it just because we wanted because we don't know why is this stock down. Maybe there's going to be news overnight, tonight and tomorrow, or something. Maybe a secondary is coming, and maybe they announce a secondary, and it's going to be priced right there at the 10-day, deep in the hole. So we don't know where or why, but this was abnormal action. Normally, when a stock follows through like this after day two, right initially, it doesn't have a decline like this, in one day. So you never know. So it's all risk management. What we do know when you look at a position is, when you look at the stock objectively, huge volume after it just had tremendous volume on the upside, downside on day two is abnormal. So, and while a firm, which we bought also on day two, see, look at the difference. See, we bought this on day two right there, but look at what it did today. See, it very, very tight. And that's what we wanted. That's what we expected out of DOCS. So there's sometimes the reason that you sell, and Wes and I are doing we got two presentations. We're going to be we're going to be a guest of the Boston IBD Meetup group later on this month, and Traderline is interviewing us, if you guys know Traderline, about selling rules. And this is one of our selling rules is an expectation breaker. So you can see what I'm talking about is when a stock doesn't do what you expect it to do, that's known to us as an expectation breaker. And that's a sell signal. Like, okay, we expected it to get tight after this outstanding quarter, the way that some of these other examples I showed you looked like. And so this was clearly, and it could reverse and we could buy it back if this action subsides and say it reverses back up, we would consider buying it back over $80. If it reverses, then we are flexible minded enough, and you should always be flexible minded enough as well to change your view when the situation changes. But that's a sell first and ask questions later action. But it was disappointing action to us. And while we only lost, less than 0.25%, it didn't do what we wanted it to do. And so that's why we sold it.
Mm-hmm.
I see a question on COS, which is the number one ranked IBD stock in the universe. Now look at this. So I don't know if I've seen a stock. This is a leading stock, and they're in the cave. They provide cables and connectors for all the data centers. And the numbers are great. Now, it is a commodity business that they've done very, very well in, but this is how the stock got hammered on that deep seek day. It was down.
This one is a contract manufacturer, Roy. And
Yeah.
On the weekly, if you may take a look at the weekly,
Yeah.
it seemed to me a classic railroad in the weeks of 124 and 131. And I was wondering if you felt it was a railroad.
Let me take a look at it. I want to see how it was down 29%, I think, if I'm guessing. So this is a stock that went from new highs. Yeah, down 28% on tremendous volume. And yet it's come all the way back. And, this is what leading stocks do. But, man, this action is crazy. So let's look at the weekly. Boy, that's it from a definition perspective, like the spirit of railroad tracks, yes. But it did make a higher high. And normally in railroad tracks, you don't make a higher high. And if it would have stopped right there, actually, are you talking about like these 2 days or these 2 weeks, or are you including the week ago, last week?
No, 1 second.
Okay.
It's a 120, 124 and 131, those 2 weeks. So it's this third last week and the fourth last week. Not the other one, not the fifth last week. But the tail is very long and the volume is very much on 131, the week of 131. So it met the classic definition of railroad.
Yeah, it would be a more classic definition would be when the low and the high, they're both about the same. Here, last week exceeded that, so that negated the railroad signal. And that the railroad signal, it's quite rare, but you are exactly right that those happen many times at the end of the run. And so it's possible that the run is over as well, because this stock's gone up from what, 12 to 120. It's up tenfold.
Yep.
And so there's a that possibly could be the top as well. But the idea that it came all the way back again, that just shows you, like, this is something that is just, wow. I mean, just too crazy, crazy, crazy here. And again, the indecision, like right here, back to the 10-day. So, but earnings are out of the way, and it came all the way back, and it is the number one stock in the IBD top 50. So this is a tough one.
Thank you.
In your stock screening, how much weight do you give to the EPS rating, or how low are you going to go along with the RS rating?
How much do we use for both of those is the question?
Like, I'm assuming you give more weight to the RS rating than the EPS rating.
Yeah.
But on the EPS rating, how low do you go, or depends? Like SE in your current stock pick does not have a very good EPS rating.
Yeah. So let me show you a little trick, guys. Okay. And a trick, tactic, tip. Okay. Let me see. Okay. So I have found in the past that, and there's a number way of screening. So you're definitely right. If you only have one thing to screen for, always take relative strength. And you can find the relative strength right here, guys. When you go to open stock ideas, you can go to the weekly or relative strength blue dot. That's one way of getting some relative strength. And let me go to the weekly. Where's the weekly? Weekly review. Right here. And now that just gives you the trend template. I have them over here on, I have them over here. These are the screens that I pay attention to. And I have this screen, that 10 up 10% price, or volumes up 300%. That's a screen that we often find the leaders. We also run this up on volume every single day. That's a great screen that's pre-programmed, so you can see what is in that list. These are the ones that hit today. And then the stocks that are making 52-week highs, we always run that to see what stocks are making 52-week highs. And then you can sort those all types of ways. But this really is your buy list, guys. The stocks that are making 52-week highs. And notice you can just look through here and you can see VeriSign's making a 52-week high. There's SC right there. There's Shopify. There's GE. This TKO's got an interesting story and chart. There's Carvana, that may be a beneficiary of all the fires in California, where they're going to have to replace new and used cars. There's always a thesis, not always, but that's what we normally find that's useful, is you take a thesis like AI powering the data centers. There's a theme there, and then try to work that theme by finding the leading stocks in that theme. If you believe that theme is the dominant prevailing theme of the day in the market that day. So try to find that theme. So here's the relative strength new high list. This is the number one screen that you should be looking at always, and particularly coming out of a correction. And these are the leading stocks in the marketplace. And they all, they're all there because they're outperforming most of the stocks in the database. And right now there's 102 stocks in that list. And what we do is you can just click on your space bar and go through many of these, but they're going to hit volume screens often, and they're going to be making new highs often. But this is, and actually, I'm not familiar with many stocks on this list right now. Currently, right now, there's SC, but that is your go-to. This Waystar holding looks excellent, on the chart. And we just go through these. Like most of the time, I do this on the weekends. here's that TKO that's got some interesting fundamentals, but you can see that, this stock just broke out. It's on the relative strength screen. And see, there's the breakout. There's your buy point. And I wasn't following, this particular stock, but the estimates look great. I wasn't following until just recently. And look at where it's broken away from the pack. Earnings are in 15 days, but this has got great leadership criteria. So many of these stocks, when you look at this and when you do get good at doing this, you will find that the relative strength and the idea that stocks breaking out of a base, going into new high territory, that those are buy signals, and many times they often work because no one's aware of them. That's the pond that nobody's fishing in. That they're underowned or underknown as well.
What is could you show that screen? What criteria do you use in this new high, RS new high?
RS new high, yeah. Let me see what we have there. And open edit. That's the only criteria that I have. The relative strength line is at a new high on this particular screen.
What about the 52-week high?
52-week high. Off the price, current price over. I've got that criteria. I don't want anything under $15 and make it a 52-week high. A lot of these, I put different criteria. Like you asked me about the earnings. I found that this screen, earnings, and when I just got in the business in the late 80s, I met a guy by the name of Norman Yu, and he was a great investor back then. And I found that, and I was with a investment firm, and I was using him to manage some of my client accounts. And I noticed, and I had this technology. It was called Daily Graphs then, but I found that well, first of all, O'Neill runs it's called the Weekend Review, and it's all stocks that have an 85% minimum EPS and an 85% minimum relative strength that's within 15% of a 52-week high. And Norman used stocks, and he had a number of triple-digit winners. I backed it up, and I found that many of his stocks, the winners, they didn't have that 85. They didn't have that 85. They had 70 to 79. And so that 70 to 79, those leading stocks sometimes would show up on that screen, but they wouldn't show up in the newspaper because the newspaper criteria was 85. And so I run this screen to find some of these stocks that might not be in the IBD, might not hit the IBD list because you don't have that strict criteria. For example, look at this MNDY. They just reported, and this stock probably wasn't on a list. And let's take a look at what that looked like. It was on this 70 to 79. Let me see if I can see. Look at the breakout there, guys. See, it wasn't on any list according to IBD, but now it's on that list because it hits 85 on the relative strength. See, it's 93. But look here. See that earnings per share ranking? It's between 70 and 79. And so that's one that shows up that wouldn't have shown up, and it may not be on any IBD list now, but it's hitting this list. And see, there's a volume signature that we've talked about numerous times. And so run this screen right here. And let me see what else is on. See, Wells Fargo's on the list right now. Let's see what else is on that list. And so again, you're cherry picking, and you don't, I mean, look, I run, look how many screens I run. I run 100 screens. This is my favorite screens versus I've got other lists where I run screens. So, you sort of know what to, if you run enough screens, there's going to be overlap. See, look at this Flutter Entertainment that's on that list. See, there's Flutter. See, it meets the criteria, 85. And look at the earnings per share. See, it doesn't fit the weekend review. And I found that weekend review, that's the 85, and within 15% of a 52-week high, along with the IBD top 50, along with the market surge 250, you're going to get the majority of these leading stocks. And then you just simply have to narrow it down. Then you just narrow it down based on how the stock looks, and more importantly, how the stock, acts. So there's Twilio. See Twilio. $97 relative strength and a 78 earnings per share rank. See? So this is a very, very useful technique and tactic to point you in the right direction. And these are just some of the things that we look at. Let me see what's on this, what I have in the criteria here. Yeah, okay. See, this is the criteria that I put here. Relative strength over 85, over $17 in price. I needed to trade at least $100 million a day. And I want it to be within off the high less than 8.48%. And so you can change this criteria to have fewer stocks or more stocks. That's just the criteria that I'm running with now. And let me show you that 85. Well, here it is. 85 relative strength within 15% of 52 week, 15% of a high. But I've got that 85 under let me see where I have that under. $85. I think I've got it. List, favorites, relative straight line, new high, my list. Marcus Smith is it's very, very good. So you can put all kinds of criteria in. There's the IBD 50 index right there. I was looking for that 85. I forget where I have it right now, but it should.
You just passed through 85 index, if that's what you were looking for.
No,
it's something else.
Yeah, I'm looking for something else. But that 85, but I know I had this again.
85 RS within 15%, right?
85 earnings per share rank and 85% relative strength within 15%. Here I have 85.
Yes. Yeah.
Yeah, here I changed it. You can see the criteria over here. It's a 70 earnings per share rank, which puts you in that 70 to 79 earnings per share rank. That's what I have here. So you can see that 85 relative strength over $20 within 15% of a 52-week high, composite rating of 95. So good fundamental screen with that earnings per share little tweak that I gave you before, that tweak, and sales percentage last quarter up 20%, and So there's all kinds of ways that you can, modify these things. And, if you do enough work, you'll find these leaders. See, there's ISRG, there's Short Ninja, which we owned before. There's TDD, HIMS, and so forth. There's Flutter.
Hey Roy, any thoughts on PM? Philip Morris, PM?
It's not something that I would ever buy because it's the defensive stock, and it's one of these consumer, I guess, discretionary items, and great action. But typically, stocks like this, from a defensive standpoint. When people are afraid, money managers are afraid to be in the market, they can go to like the most conservative ideas that pay dividends that you're getting, like alcohol and cigarettes and things like that. That's where people are they're going to spend money there regardless of what happens with the stock market. And so that's, this is really telling you, it's telling you there's a flight to safety out of like potential, it reflects the choppiness in the market, but we do know that. And so it's just showing you that people are just fed up with the choppiness. Like they said, man, just get me out. And, money managers, you can go to 100% in cash. And we do that quite often. We're not going to stay in a market downturn when the market is clearly, in a downturn like 2022, but most institutions must stay fully invested. And so that's why they park their money in Coca-Cola, Philip Morris, and stuff like that. So that's my thought.
I get your point, Roy, about PM being a conservative stock. If you look at Walmart or Costco, these are, I would say, they are considered to be conservative too. And look at their run. I mean,
Yeah. They've been wonderful, Costco and both Walmart. And so, but, on the other hand, if you take a look at the dollar stores, where you would think like when the market is worried about a recession, and you would think that the dollar stores would thrive, and yet the dollar stores haven't. But the big box, these are Costco and Walmart are the two best run retail establishments in our country. And the stocks are telling you that they're just, they've got amazing leadership, amazing performance. They've got it down to a science. And, both Walmart and Costco have been great winning stocks, and they've got superior action. I would much rather own Costco or Walmart than a Philip Morris. So that's how I distinguish it.
What do you think about the newer stocks in this staple area, like cocoa and the vital farms? Because it's a similar analogy. People who use these products, they are going to use them anyway because they are. It's kind of a recession-resistant kind of thing. Cocoa and the vital, VITL.
Oh yeah. Yeah. So this is interesting. So we had our ups and downs with the beverage company Celsius. A couple of years ago, that was a leading stock that eventually got crushed. And it's interesting that this has got this has got a super chart, and it's a smaller company that, it's only a $2 billion market cap. It's a small company, but, the action on the stock is really good. And this is one that I would definitely do some work in. I don't know the stock very well, but I am aware of the stock pattern, and the stock pattern is all that I need really to know about the stock. And it's got an excellent pattern here. And of course, you can see this at, their products on the grocery stores, and VITL. So not as good not as good. This is, choppy. It's going the wrong way, and it's not in a firm uptrend. The cocoa looks much better.
Roy, can you please check TEM, 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 Tampa
Yeah.
symbol?
So this is and I've traded this a couple of times, and so the TEM, they've got a tremendous board. So you got the previous FDA chairman Scott Gottfried is he's on the board. You got like the joint chairman, joint chief of staff. You got all kinds of like famous people that are on the board, and this is a AI company that's using NVIDIA's got a position in this stock, and they actually have numbers. See, 147 million, 145 million. So it's not like a startup AI firm, and they specialize in using AI technology for drug discovery. And this is going to probably be the premier AI medical stock. Kathy Wood owns it, along with RXRX is another one. But this is like really choppy. You can see the ups and downs with it. It needs to calm down. But when this stock goes to new high territory and goes to 80, trades over 80, you can see it's got up to this turbulence zone. So it's up here near this turbulence zone where the old highs converge. So this is something, it's not buyable here. I mean, your buy point was right there. See that right there?
Mm-hmm.
Traded 33 million shares, exploded up. There's your buy point above the 50-day. There's your buy point right there. So, and for some reason, I passed on it. And I think I actually tried it maybe down there, like personally, and got stopped out. But there's your buy point.
Roy, can you look into Sound AI?
Yeah. Who? What's the symbol?
SOUN.
Oh yeah, SOUN.
I think it's a short squeeze going on. It's more than 20% shares are short.
Yeah, so we actually owned a small position, sold it at $14.95. We had like a small position, 1 or 2%, that we bought it like right, I think there, and we sold it yesterday or today. Very small position. See where it broke down, and we traded it here. This is a big winner for us earlier. And there's your short squeeze. There's the move up. And incidentally, guys, I'll show you something. And again, this is by no means a recommendation, but see where SOUN, you had the volume signature, and the volume signature, see right there, it traded 218 million shares. And that's that day. Do you guys see that clearly? SoundHound. So the total addressable market, I've written about this on Twitter before. The total addressable market is the world. And they do have competition with CRNC, but SoundHound, they're employing their technology like in Bojangles, in Chipotle, some fast food restaurants, so that the AI mechanism, this is voice, you place the order with them. I think maybe Taco Bell even. And so the order, Wesley just went through the drive-through the other day. He said, man, it's phenomenal. He's talking in incomplete sentences, just in fragments, and they're getting his order right. So and they're also in cars. They're in Hyundai and a number of vehicles. Anyway, the total addressable market's huge. So it had this AI theme, but look at this is where it first showed up. So there's the volume breakup. It actually you had a volume explosion right there at first, and that was at like $7 or $8. Then it came in, then turned up, and we bought it right there, this day right there. That's where we took a position, and I think we had like a 50% move like in 4 days and sold it right there. And now we took it got hit in the AI debacle. Let me clean this up. It got hit in the AI debacle. And so right here, when it broke that downtrend line, right there, we put it back on. Like we took like a 2.5% position, 2%, something like that. Looking to let's see if we can get another run. And that would certainly be a short squeeze potential run, but it broke down, see today. And so we had a 14.95 stop. We got kicked out of it. So it's no go based on the chart here right now. But another stock that reminds me of SOUN, speculative. We have a 1% position, BBAI. And this is see where it broke out. And this BBAI is machine. There's an AI stock. They've signed a contract with the government. They actually have numbers. See, they've got revenue numbers. They signed a contract with the Department of Defense, and it's an AI company that specializes in machine learning. See, it broke out, and this is and we bought it. Yeah, we bought it right. I think we bought it right there, I believe, if I'm not mistaken. And we got kicked out of half today. So we have a 1% position. But see where it came in. See, you had this move here. And it reminds me of if that SoundHound will come in, the way SoundHound came in a couple of days, 2 days, and then it turned up, and then it doubled. And so this is highly speculative, but there's the volume signature. And that day it traded the most volume of any stock in the market right there. Traded 269 million shares. So the highest volume ever right there on the breakout came in 1 day. So, this is highly speculative, small market cap of 2 billion. So, keep an eye on this one to see if it bottoms and turns up here. But I think this right now, if it comes in and then turns up, that might look something again like SoundHound. See right here. See where it came in 2 days and then turned up right there? Came down, almost to the 10-day. So that was a big percentage move. That's why you can't have like a 10% move in this stuff, buying it coming in. You have to wait until it's trading in your direction. But keep a look at that. And then from that period right there, so you got a 50% move from right there. So keep your eyes peeled. If this is a highly speculative situation. I've got a 1% position that we might try to get back in 2.5, and just to see if we can get a payback in a speculative stock that people are piling in. It's highly speculative, but just keep, I'm just pointing that out to you. We have no big money there. We got $1 million there. That's it. Small.
Roy, can you take a look at ASTS?
ASTS. So this is another one of those stocks that this is a big winner for us. And this trade there. See, there's the volume right there. That's what got it going. It migrated up, and then you had the blast off right there to the top. And we liked this from a fundamental perspective because they have signed agreements with T-Mobile, AT&T, among others, to provide satellite on your phone. But they're slow launching it. They're slow launching the product. And I think SpaceX Starlink has a superior footprint, but that's what's gotten the stock moving. That's what you've had some movement in LUNR and Rocket Labs recently because of Musk and the exploration of space and stuff like that. So that's sort of gotten it going again. And so I don't know why it's moved here. There's probably been some news flow, maybe with them sort of launching their product, but Starlink, I think Starlink offers a superior product, I believe, and that's why it's moved. And we did trade it during this period here. Then it got choppy, dead. Now it's it's a sloppy chart, right here. But that's what's going on with it.
Roy, how does RKLB Rocket Lab looks?
Looks, among in this group, it looks really good. Look how you've had this move. There you have the ants, where it's going up 13 out of 15 days, or 15 out of 17 days, or something like that. The ants, and after a move up, that typically is a short-term top. It's it's real. It's like the market. So look how choppy this is. It's almost impossible to have made money here, depending on when you got it. Look at the ups and downs. This is a 60-minute. How can you trade that? That's untradeable. But it is holding up. It's got a 99 relative strength, and this is you've had this great move from 10 to 30, and this does they are a player in this area, in the space area, and lunar also. Same kind of thing with lunar. So you don't know who the winners are going to be. And then, you have those quantum stocks, the same kind of thing. The market gets on these tangents and on these themes, but many times we avoid anything that's not making money when it's like a real speculative situation. Most of the time, we rarely buy these types of stocks that are maybe in phase for a brief period of time that we don't think has any long-term durability. So
RKLB has like over $100 million sales in one quarter, so it's like it is.
It's got So they're doing real numbers. Real revenue numbers. So this could be a leader. This is a leader right now, and it could turn into be a big stock for 2025. But it's just going through this consolidation. But I do like the idea. See, this is doing like TEM. They've got revenues, real numbers. Real. They've got a product. It's not something that's moved up that doesn't, like rigatoni. Like, you call this stock, we call it rigatoni, like everybody else. That's doing, $10 million that had this big move because of the quantum stocks, and then would drop from 21 to 6, in about 3 days. So that's the kind of thing that it's escalator up, elevator down. That would put me in the fetal position. I've been here before, so I avoid stocks like this. QMCO, Rigetti Computing, and things like that. You can have these powerful bursts, but you have to get off of them as quickly as you get on them as well. And again, that BBAI might be one of those. Try that on your own peril with only an amount of money that you can afford to lose.
Okay. Thank you.
I have a question, Roy, about sell rules. You mentioned you guys are doing a master class with Richard. So when we talk about, a stock taking out the low of the day or a recent key low, and let's say we had to put a hard stop with the broker, how much below the low of the day would you guys put the stop? Would it be, because a lot of times it just undercuts intraday, just like let's say a 0.5% below that low, and then rallies back up. So if you have to put a hard stop, do you put it like a 0.5% down, 1% down, 10%? I mean, 10 cents down.
It's all in. I mean, it is so much of an art, and there's no. It's just what your eye sees. It's what your eye sees, and based on sort of experience. And there's no. Many times we get stopped out, and and again, when you have your broker, like we got kicked out, the broker, the if you've got another job, that's the dilemma. But you got to have that stop in because you want to protect yourself for something drastic happening. But many times, I would use the low of the day, and particularly depending on the setup, if you have a stock, depending on where you buy the stock and what you're looking for, particularly if there's a key reversal, like for example, here, if you're watching this stock and you're saying, hey, I'm going to come in and I'm going to initiate a position right there at the 10-day, right there, your first time, see right there?
Yeah. Mm-hmm.
Then you would put your stop in the next day when you can see this, the stop, you could have used the low of the day that day. So you could have bought it right there with a minuscule stop. That is really trading at the danger point, which is which is the lowest, but this is the tightest that you could put the stop in. But look how right you were. See, and so I like to put if you see the stop bottoms and if it trades off the bottom, many times you can use the low of that day. But many times I use like the day before. But it's either the daily low or the day before for your stop. So and you want to keep that. Ideally, you want to keep that like at around 3% or less, depending on when you get executed. See, if you bought, so if you did that strategy, which is a great example, and depending on where you bought it, see if you bought it during this day, say you bought it at 10. Well, you can't let the stock go to the prior low. That's 675.
Yeah.
You just lost 30% if you get stopped out. So you have to look at it, and on your stop should be predicated and dictated upon where the entry position is. But you want to, you don't want. You don't want to take more, and it's position size too, of course. You want to keep your position size down so you don't lose more than 1% or 8 to 10%.
Yeah.
Normally, you can adapt with that, but we're going to spend quite a bit of time putting out like some real useful sell rules, and it's going to be used for all kinds of things. Just showing you, but it's based on the setup. Your sell discipline is going to be different from a shakeout +3. It's going to be different from a double bottom. It's going to be different on a cup and handle. It's going to be different on a breakout. So it's going to be different. Your sell rule is going to be different based on how extended it is off of its moving averages. So there's all kinds of stuff.
Yeah. Well, for instance, IBD is a perfect example. I mean, I guess illustrates my question perfectly here. IBD, if you look at that key low there on the what's that like last week? Let's see here on the look at February 3rd.
Yeah,
that big bar. And you see today, like you said earlier, you said we're toying around with that low. So right there, where would you say how far below that low on that day would you
Well,
cut the position?
What I'm looking for, see where it's showing up 44 cents?
Yeah.
Okay. So if this market, and so, the CPI news comes out at 8:30. So you could buy this stock pre-market tomorrow, like right here, 54.55, using today's low as a stop, and today's low, 53.87. That is what that's a point. That's only a point, right? So that's not even 2% where your stop would be. So, and also the bigger position that you take, guys, the bigger position that you take should persuade you to have the tightest stop possible. So, you could, if you, for something like this, if you bought, 2,000 shares, or if you buy 1,000 shares, you're risking only $1,500. And yet, if this is the beginning of the move up, it's going to come up here to 60. And then if it takes out 60, it's game on, and it's on its way to 100. So, you're risking in a situation like this, only $1,500 to make 50,000.
Yeah.
And, if you do 500 shares, you're only risking $700 to make 25,000, over if you get a run that we're expecting, like a run like this. So you got to, so a lot of that has to do with it all has to do with your position sizing, but the bigger the position size, the tighter you have to be. You don't want to take a 20% position and lose 10%.
Yeah. If you look at that day there on January 15th, see January 15th low, it's a little further to the right. One more over to the right. Yeah. January 15th low versus February 3rd low. That's that big bar to the right. Yeah, the big bar. Yeah, that big bar to the right. So that one. So January 15th, the one a little lower than that.
Yeah.
See, those two bars are, right there.
Yeah.
See those two bars, if you run exactly. See how that February 3rd undercuts just by 0.5%. I'm just measuring here and trading you.
Yeah.
And if you sold it right under the low of that first bar, the low, you're out of it, but then it reversed up, and that was just like 0.5%. So that's what I was thinking. I guess my question was like, do we allow it like 0.5% to kind of undercut and rally back up so we don't get kicked out for nothing,
Yeah. And again, if it, yes. So I definitely, and I see exactly what you're saying. I think that's you got a great eye. And again, and I wasn't, I was looking back here, but you're right on that bar right there. There's, and a lot of times you can draw your stop, this way too, just to see where the supply is. And so it's right here. This is something, again, this is our best idea. And so, but we could sell it tomorrow, just depending on, I don't think we're going to ride it to 50, down, we're not going to be down 15% in it, but we're hopeful that it will turn right here. So if it turns right here, then it's going to be a really good setup to buy, to take, if you want a 10% position, you could buy 5% on a turn tomorrow using today's low as a stop. And then you could, then you press it right there going over the 50-day, that period of resistance. That's the best way to handle it. But, so it's real choppy here, but it's not giving up much. Let me see what Bitcoin actually looks like on stock charts.
And we say the low of the day, that's literally the dollar amount that we have in the actual low, like dollar wise.
What was your question?
Yeah, you just mentioned we will sell it at the low of the day. That's pretty much whatever the actual low of the day is to the cent type of thing.
Yeah, if it gaps up and then takes out today's low, that's what I would mean. If it gaps up tomorrow and takes out. See, this is can you see my
We
screen
see it.
here?
Yeah. Stock charts.
Okay. So look how tight this is. And so I thought it was going to go, see right here.
Yeah.
And by the way, see where now it's the MACD's trying to firm up,
Yeah.
trying to put it at the bottom. So there's a supportive day that shows you much better than on those Market Smith charts that everyone's talking about. See the supportive day right there and right there? That's institutional support. And now look how tight it got. Now this is through a lot of noise there. And it tried to turn. You had an indecisive day, and now it's just kind of sitting there. So it needs to break above that 98,000. It needs to come, you just need it to explode up and take out yesterday's high bar, which was today's bar, if I can get this to stop, and then it goes. So this is supportive action. Now you could get a washout, if the proverbial, what hits the fan, you can get the washout and come down here to 90,000 if the market gets ugly. If there's quote risk off, but it should be buyable based on everything that Wes and I have shared with you earlier, where we think that we think CPI is going to trend lower, even if it misses by 1/10%. We think earnings are great. We've got all these leading stocks that we're looking at that we own. We just don't have the boat backed up because of the uncertainty, the event risk right here. But that is weakness that should be bought if you're bullish on the fundamentals, and we are very bullish on the fundamentals. The timing might not be right, but it could get in gear quickly with a move like over here. If we get a move like right over here, and look, in 3 days, you went from a sell. Look, see where you undercut air, you got stopped out. Everybody got stopped out. Then it came back, and then it changed above the 10-day, 21-day, above the 50-day, and game on. This time, I think this time it's going to probably work. And this is going to morph but it's got to trade up. And we think this might be the beginning of it finally breaking out and going from 100,000 to 130,000, on the move.
So, Roy, last Saturday there was a webinar from IBD people, Scott and this guy Justin. So what they said, if it is your high conviction stock, probably at key level, don't put a stop for all your shares. Like if you have 1,000, maybe put on 20%, like 200 out of. And so to the Tosh question, like if you get alerted, okay, 200 of my shares were sold and it is coming back up, probably you still have 800. But if it is continue going down, then you can make your decision like what to do now.
Great insight. Yeah, I agree totally. Great. There's no one way of doing it. Using staggered stops is that's a great technique and tactic too. Great input there, Amit.
Yeah, that's what Scott said. He normally does that because he's busy with, like, people are at work, they cannot watch. So yeah, that's fine. Roy, I have question on that your previous screen where you had MACD. Is it reliable indicator, and what do you see in that? Like that black line is crossing above the red line. Is that a positive?
Let me show you. I use this. I use this often. Let me just show you. By the way, we're going to go, guys, to 10:15. I've got about another 10 minutes, and then we're going to call it a day. But yeah, so the MACD, it's very, very useful, particularly when the stock's in a correction. Now, many times, again, remember the MACD, and this is the MACD on this chart that I'm showing you. And this is the MACD is a momentum indicator. It doesn't mean necessarily that the stock tops. In fact, some leading stocks, you get a sell signal, where a sell signal would be where the green line crosses the index line. many times stocks go higher in price, but the momentum is waning. So it's how do you use the stock? But I found that particularly stocks that you might be following, that they might give you a really good entry sign. And one component of the MACD is something called the price phase. So let me show you what that looks like. And this is one element of the price phase. And when the stock is under when it's in a correction, when the momentum is waning, that many times this price phase, when it comes in and you get your first update, that's a buy signal. That's an early buy signal. And so let me show you in context what that might look like. We own Tesla. We don't own it now, but look at this. Look at how this gave you this price phase gave you a sell signal. See where it's making a higher high, and there's the first day that this is the price phase is a technical indicator. That's one component of the MACD. There's your sell signal. See right there?
Mm-hmm.
There's your sell signal. And notice where it's made lower lows the whole time. You had a brief move where it lasted one day and then it resumed the downtrend. And see, this is an indicator that when a stock is getting under distribution, when it finally turns, you'll see it here. And now, if you look at the MACD, look how the MACD on Tesla, which has, with, autonomous driving and the robotics, should lead to a terrific movement in earnings per share moving forward. But it's come under distribution because, first of all, their deliveries are off, and it could be the Elon Musk trade where people are tired of him and he's losing some not credibility, but from a political perspective, he might not be as popular as he was before, and so it's holding, and he might be distracted trying to buy AI today, trying to buy open AI from Sam Altman. But this stock clearly is in no man's land. But if you look, if you're looking at the technicals, when it finally bottoms, look at where it bottoms. See, look at where the MACD bottomed last time, right here, and you got a buy signal after being in a sell-off. NVIDIA is another great example of using this tool. And there's your buy signal. So there's the signal where you got to buy it right there at 288. And so you got to move from 288 to 400. So this is one, and this is the MACD is showing you that it's the lowest momentum that the stock has and distribution the stock has gone through over the last year. So this is very, very odd. So if you're a bottom fish player, you can use the MACD. You can also use the point and figure reversal. So you can see, and I know I'm getting in the weeds with you here, but this is the point and figure chart shows you that it's in a downtrend. You would not really buy this until you get an uptrend into a new column of X's, like this. And so you would be watching this on your chart, and you're not going to get the bottom price, but you'll get when the price turns. And Jesse Livermore used to call this the shakeout +3. I use the point and figure to utilize the same concept. When you get a 3-bar reversal and it goes into a column of X's, that's another technique and tactic that is worth studying by yourself and doing research in.
So, Roy, when you are making any new buy, are you like using them as a check box? Okay, this is MACD is crossing, or you just purely check like market search chart? That's good enough for you. I mean,
well, the market. I mean, and people like Mark Minervini and Mark Ritchie, they never use these, but I have found that they're quite useful occasionally, and it depends on your strategy. And it would not be as useful if you're buying BCP volatility contraction patterns, it would not be as useful. This technique is mostly used for if you're bottom fishing, and Minervini would never bottom fish. I say what works. I say anything can work depending on depending on the timing of the entry in the position. There's no just one way, but Minervini does it only one way. But I've been doing this a long time too, and I'm wise enough to know that hey, there are different times, different techniques and tactics work depending on the market environment. And I certainly don't have all the answers, but I think that these can be useful tools.
Sure.
And that's why we list them on our slide deck, because there's a number of these things that you can utilize to improve your entry points and as well as exit points. And many times you can use this MACD and this price phase to exit, to let you know when the stock is peaking to exit the position. And I'll go through one more stock and then we can call it a day. See, let's take a look. See, there's NVIDIA. And there's NVIDIA that you're on a buy signal now, but it's really not, this stock really got squirrely, but you're on a buy signal now. See where that price phase turned up when you're sitting here looking right there, day one. There's your buy. See, you didn't get the bottom, but there's the MACD telling you, not the MACD, the price phase that's telling you that, okay, it's the momentum potentially is turning right here. So this is just now, again, you don't have confirmation really until you get back over the 50-day, and it's at resistance. It could roll over easily right here, but that's just a nuance in terms of identifying some entries and exits. And with that, guys, I'm gonna call it a night. Thank you guys for attending. I hope you learned something. I certainly learned something tonight. So thank you guys for your input.
It was amazing. Thanks a lot.
Thank you, Roy.
Thank you.
Thank you, Roy.
Thanks, Roy.
Welcome, guys. That's a great night. Let's go make some money. Let's hope the market cooperates.
Looking great, by the way, Roy. I know you mentioned the Eli Lilly drug.
Yeah.
Look great. You're fantastic.
Yeah, I look different from. I did look different than on my slide deck. I need to get my picture taken again.
I mean, even from last month. I mean, I think the last couple of months you've lost weight there.
Yeah, I've lost a lot. Yeah, it's expensive though. $700 a month.
Oh man, it's paid off. I mean, if you can maintain it right here.
Yeah.
Fantastic.
Thank you. I appreciate the kind words. And guys, appreciate the remarks.
Thank you so much. Thank you, Roy. Take care.
You're welcome, guys.